There's a short trade here on crude for anybody that's watching it. 96 would have been the entry. All right, good afternoon, everyone. Today is June 7th, 2013. It's Friday, June 7th, 2013. Let's go over the results from the live trading room this morning. Let's see, on crude oil we were plus 13 ticks, on gold we were plus 24 ticks, and on the Russell we were minus 8 ticks. Okay, let me bring up my spreadsheet and slide that over for you. Here it is. Minus 8 on the Russell. We didn't trade soybeans. I wish we would have. We missed a whole bunch of nice trades. Well, 2 or 3 nice trades on soybeans. We didn't trade natural gas. We did trade crude, and we did trade gold. We also traded copper, but we ended up break even on copper by the end of the morning session. It took us 9 minutes and 2 trades this morning to get to $220 a contract. So we got our 2 points in 9 minutes. We took a total of 12 trades today. Not a whole bunch of trades, but more near the average. The average last month was about 11 trades. 11 trades a day, or 11 trades in the first 2 hours. Today we had 12 trades, but our average is higher so far this month. We are at $1,297.50. That's on the week or on the month so far, the month of June. Our goal is to try to get up above this level right here. That was last month's total, $6,292.50. We've got our work cut out for us because we only have a couple weeks left here. What do we have? 1, 2, 3. Well, we have 15 trading days. Today I was up $620 a contract, or $610 a contract early on, and then I had a couple of losing trades, but it's all good. So the gross on the month is $1,297.50. The net on the month after an 8-tick per turn commission, $8 per turn commission is $750 per contract. That's on the week or on the month so far. Okay, on the 5 days we've traded this month. All right, so let's get into the trades. Now I have a couple of different things showing right here. Okay, this is the Brent crude, and this is the crude that we normally trade. I'm starting to look at this one because it's on ice and because we're going to be doing something with the ice exchange next month. So I'm starting to look at it. I mean, you can see it right here. They're very similar. You know, the structure of the whole thing when it comes together, when a trade comes together, is very similar. You may notice that I don't have the cycle portion of the slingshot on this one. That's because I was just looking at something else, something I went over in a partners meeting a couple of weeks ago. We did have our partners meeting last night. It was a good one. There was a lot of information in there. I believe everybody that was in the partners meeting, well, I think they benefited from it. Let's just say that. All right, I'm going to slide this off, and we'll start right out with the crude oil. If you've not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you will get access to everything that you see here. You'll be sent an email that has a video in it that shows you how to download everything. It shows you how to download the charting platform. Now, when you do download the charting platform from Daniel's Trading, danielstrading.com, when you do download the charting platform from them, you'll be sent an email. It may go into your spam folder. It's going to have your ID and password in it to open up TT Pro. You got to check your spam folder for that if it did not come directly to your email. It usually takes less than 5 minutes. All right, it's a fully automated process, so it does get sent to you. You just have to make sure you find it. Once you've downloaded it, in the video there's instructions on how to go out to the indicator store, download the CFRN indicator set, and once you've done that, there's also instructions on how to download a layout. If you have trouble downloading the layout, just send us a request at support@cfrn.net, support@cfrn.net, and just ask me for my layout, and I'll send you my current layout. Okay, so you will have, your charts can look just like mine. All right, that's it. Let's get on to the trades. All right, on crude oil, we didn't have a ton of trades, but we did have some, and I'll point them out to you. Here we go. Our first trade on crude was a losing trade. We're minus 8 ticks right here. Okay, we're minus 8 ticks on that one, and this one brought us to, what did that bring us to? We were minus 8 on that, and I believe we gained, I don't know how many ticks we gained on this move, but we gained a whole bunch, and we were plus, I think we were plus 11 after that. All right, plus 11 ticks, something like that. The trading symbol for which one, Jordan? For crude oil, the trading symbol is GCLN3. GCLN3. Okay. For the crude oil that's on the ICE exchange, it's WTIMN3. Okay. They work very close to each other. The DOM's about the same. Everything looks pretty much the same. $10 a tick, all that stuff. I'm not sure about the margins. Let me just check that for you really quick. Let me check it here. Let's see what the margins are on that other one. The ICE WTI crude has an initial of 4,300 and a maintenance of 4,300, whereas the other crude that we trade has an initial of 45.10 and a maintenance of 41. So the margins are probably a little lower, just a little lower. But let's not get lost in that right now. Okay, we were positive after this trade right here, I think, and we gained a little more on this one. We ended up, at one point we were plus, I'm trying to read this, it looks like we were plus 19 ticks, and then I lost something somewhere. There it is right there, and we ended up at plus 13 ticks. I don't know how we ended up at plus 13, but that's where we ended up on the crude oil, plus 13 ticks. Obviously we missed a whole bunch of trades. You know, we missed trades there, we missed a trade there. I'm sure there was probably something in, nope, there wasn't anything in there. We did get that, but we only took a little piece out of it. We missed a trade up here on this move up. We missed a big chunk of this right here. Alright, but we did get a piece out of it right here. There was another opportunity to jump in it right there for some more. We missed all that. Okay. But that said, we still ended up positive on the crude oil. Okay. So I'm going to slide crude off, and I am going to bring, well, you know what, I want to bring the other crude up. After we close the morning session, I took a trade here on this other crude. I actually took a couple of them. I took this one right here, and I ended up getting a break even on that. I have to move my stop to break even. And then I took this one right here, and I ended up, I think I got 11 ticks on that. It's all the same stuff, guys. You're looking at the same exact things over and over and over again. It's just a different exchange and a little bit different market. Same indicators, same everything. Okay. On the Russell, I believe we were down one trade on the Russell, and I believe we only took one trade on the Russell. This one right here. I shorted the Russell. It pretty much stopped me out at my stop here, and then it moved up as we had anticipated it would. There were a couple of other trades here on the Russell, but a lot of the morning was spent with the Russell in its weekly trading zone. It did go zone to zone from here to here. You know, there were some opportunities in here. There was a long in here, a long in here, a long in here. All missed. And yes, I guess I did miss a few in here, didn't I? Alright, once we had the bearish cross of the MA1 down below the BBC and it came back up and tested it, we didn't have any divergence down here. So there was nothing we could do until we got some divergence, and we didn't get divergence until way over here. So there was really nothing that we could do in there. The only spot that we had was right here, but you're too close to the weekly trading zone to short it. So those trades right there on the way up, and right up here once it got up above that weekly trading zone, right here I was going into the high of the day. It stopped me out, and then it really didn't do anything anyway. It would have stopped me out at break even at best. Change directions, came down here. There was an opportunity to, there wasn't really an opportunity because it's too close to the weekly trading zone. So there was nothing in here. The Russell didn't really give a lot of opportunity today. Alright, I was down 8 ticks on the Russell. Gold. Now the gold gave a ton of opportunity today. I am scrolling back here to where I traded gold. Alright, my first trade on gold. There were some trades in here that I had missed, but the open was right here. Okay, I don't know what's happening right there with it. Okay, but the open was right here. So there was a long opportunity right in there. A short opportunity here that we missed, and we jumped in on this long opportunity, and we got, I believe we got 30 ticks profit on this trade right here. And that was a day maker right there, and I could have been done right then, 9:39. But I kept going because I have to. I was trying to describe how this looked sort of like a shoulder over here, and it was going to build another shoulder over here, and it did eventually build the shoulder over there. I missed this part right here, but once it broke the neckline over here, it really moved down. Okay, I don't know if you guys see that, the head and shoulder pattern there. Head, shoulder, and shoulder. And the neckline is right there. All right, once it broke that neckline, there was a lot of opportunity on the short side. As it was breaking the neckline, there was a short right here, a follow-up. There wasn't a lot of divergence down there, so you didn't have a lot of follow-up there, but there was a shorting opportunity there, there, and there, all that were very nice trades. I took another long trade in here. I ended up taking a break even on that. It changed directions. There was a short trade right in here. Changed directions again, and there was a long trade right here. Yeah, there was very little divergence. Otherwise, I would say there was a long trade here, but there was very little divergence. So there was a long trade in there. It moved all the way up here to that neckline. All right, that neckline seems like kind of an important place, huh? Went right up to it. And changed directions. Okay, we didn't have any divergence down here, so there's no trades right there, but we did have divergence right here. So there was a shorting opportunity right there for the move down, and a follow-up right there. All right, I missed all of that stuff. Changed directions in here. There was no opportunity to do anything in here. It got choppy, not much going on. Then it dropped down here. I took a short here. It looked like it was bottoming out. It finally put in a lower swing. Then it came right back up. And right in here, you see how it didn't put in a higher swing, so we really shouldn't have been looking for any long trades in there. Gave another short in here and a short in there. Wow, this was a lot of trades here on gold. I told you there was a lot of opportunity on gold. I got long over here. I believe that was a valid long trade. But now that I'm looking at it, I don't think it was. But I did get long in there. And why would I think that was a valid long trade? Yeah, I made a mistake on that one. I got long in here and I got stopped out of it. I needed to have a close up above the trend line, and I didn't have the close up above the trend line. I know I was looking down here probably, and I was looking for just an up close off the BBC, but we never hit the BBC. Either way, that was a mistake. Cost me, $80 a contract. So I gave a little back there, and I gave a little back. Oh, I actually didn't give anything back there. I got a break even on that one. This stuff right in here, there was a short over here that I had told everybody about, but there was no opportunity to get into it. This happened really fast. And then I was just looking for more opportunities on the gold, and we really didn't get that much as the morning ended. In the half an hour between our break and the start of the afternoon session, there was a nice opportunity right in here, and there was just a nice opportunity right here. Okay, now what you would look for on this, guys, let me just point out to you, because this is live rather than hindsight. What you would be looking for is a close above that trend line, because there's red on the cycle. Okay, so the close above that trend line is right there. There was no drawdown on that trade. Went straight up from there. All right, now the green line's up into the cycle, so we anticipate it should pull back and give us another opportunity on the long side. All right, that was gold. Let's look at copper. Copper. We have on copper 2 trades on copper, a win and a loss. My first copper trade was right here to close up above the trend line. I got in, took 8 ticks profit. My next trade on copper was over here, and this one stopped me out to the tick, and then it went down, and then it went down. But I gave the 8 ticks back on this. So I made 8 there, I lost 8 there. I missed a trade right here, and I missed a trade over here on the copper. And if we go back to the earlier morning session, look at this. There was a bunch of opportunity in here on the copper. The copper just collapsed in here. And there was an opportunity there, and there, and there. And Frank, I believe, said he made 70-something ticks or 40-something ticks on copper this morning. 40 or 70, I'm not sure which one. A whole bunch, though. 98. 98. Okay, well, that's total. It wasn't 98 right in this move, was it? Or was it? It may have been. But that's a lot of ticks. 98 ticks on copper. Let's just do the math on that. That is $1,225 a contract on copper this morning. 78 plus 18. It was 78. That's what I thought. I thought it was in the 70s. And then you got 18 after the live trading room started. Okay. And that's 96, I think. But either way, close enough. Copper right now it's testing the BBC. It's got bullish divergence. All right. It had a long trade back here on this bar right here, this up close. I know it's down below the BBC, but the black line is still above the BBC on the up close, and the cycle was blue. Oh, we had another 2 in there. Okay, so we got 98 total. All right, so we test the BBC over here. We're doing that right now. We have bullish divergence, but we have red on the cycle. So in this case, you would have to draw a trend line. The thing that we don't have here is we don't have a higher swing. Okay, right here and right here and right here. It hasn't made it up. It hasn't closed up above that. So we would skip that. 1 tick is 1250, Jordan. 1 tick on copper is 1250. Just like the ES. Okay. I have the dollar index here. I made it red, white, and blue because it's a dollar, but unfortunately it just didn't have any activity this morning that we could use. All right. I think I may knock the dollar off and go with the other crude, though the other crude, the WTI crude, it pretty much mirrors the crude that we normally trade on. Okay, and that's got a long trade right here. Crude is $10 a tick. Okay, both of the crude markets that I have up right here are $10 a tick. $10 a tick per contract. All right, the NQ had some opportunity, of course. The NQ had a bunch of opportunity. I only pointed out a couple of things in there, and I didn't take any of them. Okay. A chart for hot water heaters. I should, because I've had a lot of them. The soybeans. Let me point out the trades that were there on the soybeans, okay? On the soybeans, we had the bearish cross, pull back up, test to the BBC with a down close, but we need to get below the trend line because the cycle was blue. I pointed it out, and I said I wanted to do it, but I missed it, and it made this huge move down here on the soybeans. That went from 33.75 all the way down to, let's just say, 23.75. 33.75 to 23.75. That's the equivalent of a 10-point move on the ES. Okay. It did it all in one move. It did it all in 5 minutes. I missed it. I totally missed it. There was another opportunity to jump in here. Again, missed by me. That one was at 15 1/4, and that one dropped down to 21 1/4. Did I say 15 1/4? Hang on. That was at 15.25 even, and it dropped down to 15.21 1/4. Let's just call it 15.25 1/4 down to 15.21 1/4. It's the equivalent of a 4-point move. That's 4 cents, the equivalent of a 4-point move on the ES. It changed directions, and then I was looking for it to move up, and I missed it on the move up. Okay, right in here, this big move up right here on the soybeans. I guess I did miss a lot on the soybeans. That was at 15 1/4 all the way up to, let's just say, 15.32. Another 7 points available, and it did it again right here from 15.30 half up to 15.33 quarter. Just about another 3. Soybeans, Jordan. Soybeans are worth $12.50 per tick also. Okay, and they're $50 a point. $50 a cent, just like the ES. The ES is $50 a point. Soybeans are $50 a cent. So 1 tick on the soybeans is 4 ticks in a cent. It goes by quarter cents. So there's 4 ticks in a cent, and $12.50 and $12.50 and $12.50 and $12.50 is 50. Okay. Sorry. All right, so we had a bearish cross and another opportunity here on the soybeans. The short was from right up here. There are so many things I missed on soybeans today. It's just embarrassing. And I love to trade soybeans. And oh well, it is what it is. We were very profitable today, so I'm happy with that. All right, I think that's pretty much it. I didn't cover the ES. The ES was really choppy in and out of the zones. It did go zone to zone. It did have a couple of opportunities in here and in here. Long opportunities this morning. There was one right up in here that only went a point before it pulled back. That might have stopped you out. That was pretty much it. That was pretty much it. Jordan, you should take the free trial. Okay, take the free trial with us. Go to CFRN.
Jordan.
Go to CFRN.net/apply. CFRN.net/apply. Sign up for the free trial. Okay. I explain all that stuff in the live trading room. Okay.
And also to anyone else that wants to take the free trial, if maybe you're already on the free trial or you're thinking about the free trial, but it's all a little overwhelming. Okay. Now there's only so many hours in the day. We've put in a request for more, but so far nobody's gotten.
Yeah.
Father Time has not gotten back to us on that yet.
We've tried to slow down the rotation of the Earth, but
yeah. If you need private one-on-one time, okay, on a first-come, first-served basis by appointment, book some time with us, and we'll, like if you've been in the free trial a couple days and it's kind of making sense, but it hasn't all clicked in yet, then send an email which says, I've been in the free trial I've been in the live trading room at least 2 days, I've already downloaded the platform, I've already installed the indicators, but I just need a little time to help me understand and for it to all come together. Okay? So, in other words, for us to commit private one-on-one time to you, now this is free, this is part of the free trial. You don't pay for this. But you have to do your part, and that is you have to get that platform downloaded and the indicators installed. Bert and Leslie, if you call them toll-free, they'll work with you, 866-928-3310. They'll make sure you've got everything up and running okay. And then you have to show up in the live trading room for 2 days, for 2 hours each day. And at that point, you can then go, all right, I'm ready for my one-on-one time. I've done my part. And then we'll schedule you sometime over the next couple days for about a 15 to 20-minute window. Okay? And then if it turns out after that first meeting that we need to spend more time with you, we'll talk to you and see what level you're at and how much help you're going to need, and then we'll go from there. Okay? Now the goal obviously is we would like for you to become a partner. Okay? That's not any kind of secret information. We want you to become a partner, but we also want you to have enough information so that you can make an informed decision, a well-informed decision as to whether or not becoming a partner is right for you. We know that it's not right for everybody. Okay? Some people need just a little more computer experience or a little more exposure to the markets before they're ready to become a partner. Others are willing to come in with very limited computer knowledge and very limited trading knowledge, knowing that it's going to take them a little bit longer. And we'll work with you if you have, if you know how to open a browser. Bert and Leslie will help you with your charts, and then Michael and I will help you with the trading side of it. But you have to understand that, if you're behind the curve technologically, you're not going to advance through the program as quickly as someone who has been using a computer and trading for, years. So, and that's the purpose of that one-on-one meeting. It gives us the opportunity to assess you and to give you some kind of an idea how much stuff you need to learn and where you're at on your journey up Trader Mountain. So, did I say that right?
I think so.
Did I get that right?
I think so. And for your last question, we can just show you what we've done. Okay. Our goal is to make $100 per contract per day. This is from the beginning of the year. Every day that is green, we made the $100 per contract. You can see that we do better than that, but that's it. This was our one down day of the year, February 7th. These 3 days, that one, and that one, we didn't make $100 per contract, but we made something, but it wasn't $100 per contract. All the other days we made at least $100 per contract. Today, after the first half an hour, we were up $610 per contract. Not every day is like that.
Now here's the thing: those of you that are listening, you're going, "Well, $100, that's not enough. I can't live on that. I need more." So, will you guys teach me how to get more points? No, but we will teach you how to trade in the simulator until you're consistently profitable. Then we'll teach you how to go live with one contract. till you make $1,000, and then go to 2, and then make 1,000, and then go to 3. So that $100 that Michael is using, that's based off 2 points in the S&P, but it transfers over to the other markets. So instead of saying 2 points a day, which can be confusing, we decided that it clarifies things a little more to reference the $100 per contract. So the way to make more money is not, well, you can make more money by getting more points, but there's another way to earn more money that doesn't require getting more points, and that is by simply increasing the number of contracts that you trade. However, just because you have the money to trade 10 contracts does not mean you should trade 10 contracts. Because if you do, pretty soon you won't have the money to trade 10 contracts. You must stay in the simulator no matter how much money you got. I don't care if you're Prince Alaweed, whatever. You got to stay in the simulator until you're consistently profitable. Then you go live with 1, make $1,000, go to 2, make another 1,000, go to 3. If you follow that process, if you adhere to it strictly, okay, your probability of not becoming a tragic trader statistic, you've got a high probability chance of coming out of this thing okay. Because we know that based on those numbers that it doesn't end well for many that attempt trading. And the reason is they come in with plenty of money, they're flush. Yeah, I can afford to trade 10. Yeah, you know, if I lose a little bit, it doesn't matter. Well, it does matter, and it adds up pretty quickly. Not only does it deplete your finances, but it depletes your self-esteem. It causes psychological damage. So, I mean, but people always come back and they want to argue that point. They go, well, wait a minute. Let me understand something. Okay, the S&P is very liquid. There's no problems with getting filled, right? So whether I trade 1 contract or 10 doesn't really matter. It's the same thing, right? Well, in a sense, yes, that is correct. But the pressure and the stress and everything else that comes along with trading 1 contract and 10, you won't understand it until you experience it. And if you have to actually touch the stove to see if it's hot, go ahead. If you actually have to touch the wall to see if the paint really is wet, go ahead. But I assure you the stove is hot and the paint is wet. So we're just trying to save you money, aggravation, and frustration.
Healing.
Yes, it takes longer to get there our way, but the good news is you actually have a shot at getting there. Go ahead, Mike.
Oh, I was just adding on. I was saying the healing time. We save you the healing time.
Yeah. Yeah.
No, that's
some of you are just starting to scab up good, you know. So, I mean. All right, we ready to go to Vegas?
All right. Yeah, we're ready to go out to Vegas. Let's head
Guys, the weekend is a great time to take the free trial. Why is that? Because you can get the platform and indicators installed today on a Friday, and then you got Saturday and Sunday to get familiar with the platform. You can trade the Globex Open live with me Sunday night. If I'm available, and I plan to be, I'll be tweeting the Open. Now, last Sunday night, wow, we had some great tweets. S&P, Dow, soybeans. Our tweets, you could have made your whole week's income Sunday night off the tweets. Actually, some of them didn't trigger until early Monday morning. But go back and look at the tweets from last Sunday night. I can't promise you that there will be tweets this Sunday night. I might not see anything. The market might be quiet. And I can't promise you that any tweet I put out there is going to be profitable. But if there are setups and I am available, I will share them with you. And if you've got the platform installed, you can trade right along with us in the simulator. Okay? No credit card required. All right, guys, don't touch your radio dial. We're going to pause for a brief station identification. We'll be right back with the one and only Mr. David Williams from PageTrader.com. And I forgot to push the button.
Press that button again.
Press that button, man.
Let's head out to Vegas. There we go.
For a living. To learn more what we do and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Cupid, we don't need you now. Be on your way. I thank the Lord for love like ours that grows ever stronger. I always will be true. I know you feel that same way too. Oh, I love you more today.
Good morning, Dwayne.
David, good morning to you, sir. Welcome to the show.
Thank you very much. A pleasure to be here. And good morning, Michael, and good morning,
Good morning,
everyone.
David.
And it's a really big show, really big show. Ed Sullivan, right? How did he say
It's-
that? Can you?
he did. You did the best imitation I've heard in a number of months.
No, come on.
Yeah.
You're just saying that.
No,
You say that to all the radio hosts. Not bad.
That imitate Ed Sullivan. Yeah. No, it's very good. I remember seeing Stevie Wonder as a perhaps 17 or 18-year-old boy, young man, on the Ed Sullivan Show singing For Once in My Life. And back then we didn't realize how, I mean, many people did, but at that point it was just, he was, you know, it was a, wow, that's a neat song and all. But I've recently seen old videos of the Ed Sullivan Show with many people who, the Rolling Stones were on this program. They're still around. But that
Elvis
show,
Presley, the Beatles.
Elvis Presley, the Beatles, I mean, just about everybody who if you are a listener that is at least 50 years old, non-smoker and in good health, you know, you would remember all these bands, the Mamas and the Papas, I can't think of all the names that were on the Ed Sullivan Show. He really got everybody who was going to do anything great ended up on this man's show. And I remember seeing the Stevie Wonder. I saw the video again recently of it, and just what a remarkable talent, out of this world talent Stevie Wonder is, and at that young age to be writing such incredibly musical songs. You know, I haven't heard much about Stevie Wonder lately. I'm sure he's retired and he's probably still loves music and plays it. But
No,
he is
wait. Are you talking Stevie Wonder or Stevie Nicks?
Stevie Wonder.
You said Stevie Nicks at first.
Oh, did I? I meant Stevie Wonder. Sorry about
Because
that.
I'm up here Googling Stevie Nicks on the Ed Sullivan Show, and I can't find
No,
it.
Stevie Wonder. If I said Nicks, I apologize. I meant Wonder. Yeah, no, he was 17 years old at the time.
And in the midst of trying to find that, I found this. Now, for those of you that come on,
I still have the charts anyway. If you're
can
gonna
you do
show
anything
something
with them?
Nope, you can grab them. If you're going to show them, you got to grab the charts.
Yeah, I was.
Okay.
Okay, so let me grab the charts. Thanks for pointing that out. Now, I was trying to find Stevie Nicks on the Ed Sullivan Show when I couldn't find it, but I did find this picture. Can you guys see that picture?
Yes, and he was...
Okay, this man OD'd. It looks for all the world like in this picture he had already OD'd and was standing up. I mean, the man died in Paris. He OD'd in a bathtub in a Paris hotel. But for all the world, he looks like he's dead there. Doesn't he?
Well, he's
Jim Morrison?
playing. Yeah, Jim Morrison. He's in a band and playing music, and yeah, I know what you're saying though. That's him getting
one of those photos. This week in rock history, the Doors enraged Ed Sullivan, Stevie Nicks and Christine McVie left Fleetwood Mac. A stalker mailed Bork a bomb. Is that you, Michael?
No, that's not me. I think that's a
Strokes
German one.
made their stage debut, and Johnny Cash passed away. What week did this happen? That's not this week. No, that's September 12th, 2011. So I don't know why this popped up in my search. Who is that? Is that the Doors? Yep. Light My Fire on the Ed Sullivan Show. You guys won't hear the audio on this. What a great band they were. What a talented guy this man was. I actually, when in Paris, he's buried in Paris, and there's like a little mini shrine. Actually, it's a nondescript grave, but it's part of a tour, but we didn't go on the tour. We just went ourselves, and we had to search all over, but we found it, and I've got a picture on the blog somewhere, And people go and they put little notes and they leave flowers and do all kinds of stuff. And I took a little short video of us, you know, at Morrison's. That's kind of morbid, I guess, but that's what people do when they go to Paris. They go visit Jim Morrison's grave. So, been there, done that.
Oh, well, he was. He's revered. I mean, there's people whose whole lives center around Jim Morrison.
Yeah, no, you're absolutely right. Let's see, Jim Morrison. Yep, there it is, right there. And every day there's the guys that the caretakers, we talk to them. Every day they have to come and clean up the mess. And at night people sneak in there and get drunk and throw up, and you know they have to constantly clean and take care of this place because of what you just said. So many people, you know, he's so revered in so many people's minds as this legend, you know. So.
Riders on the Storm.
Riders on the Storm. Yeah. What a song, man. What's the other one? Come On Baby, Light My Fire. That's a great one. What was
oh, he has so many.
Ones. Yeah.
But he was his music was a deep, dark kind of vibe that was very attractive and very sexual. You know, if you really think about it, he was a very there was a lot of that kind of energy around his music. The girls just loved him, you know, and he really meant what he was doing. He wasn't putting on an act. You know, he was really Jim Morrison. He was doing that. He really believed in it. It wasn't that he believed in it. He was it. I mean, even to believe in it, you have to be sort of separate from it. He just was who he was. So.
Somebody just sent me a post. They said Jim Morrison is actually Chevy Chase. Check this out. Oh, wait a minute. We got adult themes, and we've got to be careful here. I better pull this off and see what somebody has sent me here.
Well, there's no children in the audience.
Tell me what it is that's on. The page isn't loading properly. Paris de France. Let's see. Where's Chevy Chase? There's so much stuff. I got the page to load, but there's so much stuff on the page. I mean, it's like. Can you give me a better link, one that takes me straight to the video or something? I'm assuming it's a video you wanted me to watch. And I will if it's clean. Elvis and the Beatles were introduced to the USA via Ed Sullivan, famously. They only showed Elvis the pelvis from the waist up. I don't remember the show, but I remember the controversy surrounding the show, or I remember hearing about it after, you know.
I do too.
So, Charles, tell me how to find Jimi Hendrix is actually Morgan Freeman. Tell me how to find all this.
He is.
Stuff.
That's a great one. Jimi Hendrix and Morgan Freeman do look. I've looked at Morgan Freeman several times and said to myself, boy, he is Hendrixian. You know, he is.
That's funny.
Yeah, no, he has it. He's got a very Hendrixian kind of look to him.
Okay, I know what I'm going to do is on this page, I'm going to go Control F, and then I'm going to go Chevy and see if I can find. Nothing on there. Morrison. Let me see about Freeman. Yeah, you're going to have to give me a better link. I can't find it, so I don't want to take up everybody's time. David, I see you in the chat box. I'm going to transfer you over to Michael. Michael, can you take an incoming chat?
Yep, send it over.
Okay, it's coming at you right here, right now. So, David, how's your day? Got plans for the weekend? What's going on?
Well, I'll tell you, this weekend for me, I will be able to take some time off and get some enjoyment and some relaxation, and I do want to get away from the office and get some exercise and the usual stuff, the good things that we should all do with whatever free time we have. So yeah, and we have summertime is just upon us here, or just about to be in Las Vegas. We have the higher temperatures. Dwayne, you should be having hhigher temperatures without a doubt in Arizona.
Oh my goodness, man! We're having what they call a some kind of a heat advisory. I mean, it's abnormally hot here right now, and people, especially older people and kids, are encouraged to stay inside.
Mm-hmm.
Yeah. Extreme heat advisory. That's what it's called.
Mm-hmm. Yeah. Well, we have it. It's pretty darn hot out here, and the temperatures are, next week they'll be a little bit less, but we're starting to see the 108s and so on. And then when it really gets hot here, we'll get up to as maybe as high as 112, something like that. You'll be hotter than that there, but in various parts. I think Phoenix really cooks in the summertime out there. And, this is a time when air conditioners become very important, and you should get your cars and whatnot serviced and ready to go, because there's a lot of load that gets placed on your car. I'm amazed, honestly, that batteries, just ordinary car batteries, can withstand the kind of heat that is generated not only by the external, but by the engine under your car. Your car battery is in this heat already, and then it's 115 out on top of that. It's amazing that those things can withstand that, and they're very robust pieces of equipment, even though they're very heavy. The normal car battery is pretty amazing. Anyway, so,
Okay.
What's that, Dwayne?
I'm going to freak you out with this. You ready?
Yeah.
Okay. This is from that site. It's just kind of odd. I never could find the thing the guy wanted me to look at. Okay, this has to do with lighting and how lighting affects this person's face. This is the same person.
Mm-hmm.
It's just the lights being changed.
Mm-hmm. That's dramatic.
Isn't it? So that's what this whole site is full of, stuff like that. So what I'm going to do, guys, is since I can't find the one thing, I'm going to put the link. Now, it does have a warning, 18, but I didn't see any kind of pornography stuff on there, so I'm just going to put the link in for everybody.
Well, we're all 50 and older.
Yeah, so. Anyway, it looks like there's some interesting and funny stuff there. I'll check it out later. And
Okay, well, if you want to, Dwayne, we can get right into the markets here.
Okay, I'm ready.
Well, let's do that. Let's start over with our favorite S&P 500.
Okay.
Take a look at what they've been doing. For us, let's start from a little ways back, and we'll work our way into today. Just nothing big, but we started with a weekly top, closed below 1666, indicated a multi-week decline. We're in that decline. Yesterday, the market made its first attempt. I mentioned on the radio that for us, the next level down that would be of importance for us would be 94 to 92, and yesterday they made an attempt at that. They got down to 96.50, which is about $2.50 above the 94. What this tells us, especially with the market having a good, solid up day today, is that is the kind of miss that implies hidden buying pressure in the market. And the market does show, I don't think there's any other way to measure that I'm aware of, the kind of hidden buying pressure that exists in the market, other than being able to detect that the market isn't able to touch an important natural level that it would normally touch. And when that happens, you can't necessarily know right then and there, the first time they don't touch it, that they have missed it. They could easily go down and complete it. So one of the issues is that it's difficult sometimes, and even often, to take advantage of this information, which is very much after, in many cases, after the fact. Many trading systems give you what really amount to very good explanations for what has already happened, but cannot be actually traded in real time as an edge. It could be traded, but it can't be traded as an edge. You can't say, I've got, a 7 to 1 or, whatever it is, a 70% chance, 80% chance of being correct at this point. But later, after it completes, you can then go back and say, well, see, you could have done this. Many trading systems are based upon observations that somebody has made in the market, and that observation could be true but cannot be traded. It can only be identified after the fact as true, but cannot be traded before the fact as an edge, as an actual edge.
We talked about that at great length. It was either Wednesday, I think, or Thursday after the radio show. And I encouraged everybody, when you look at something, and I talked about, people will send you like pie charts and graphs and numbers and back test studies and all this kind of stuff. And guys, you got to just be aware that we have computers these days, and it is so easy to cook a set of books and tie it to some kind of a trading system. Now, I'm not saying that everybody out there that sends you some kind of I'm not saying everybody's trying to deceive you. I'm just saying it is so easy to create those kinds of studies after the fact. You have to be, you really have to look at it with a critical eye. And that's one of the reasons that we, and I think David himself as well, we don't rely so much on that historical type of stuff as we do what's happening right here, right now. We send out our alerts or tweets in real time. We trade in the live trading room every day in real time. And it's very important. I mean, whether you become a client of David's or you become a CFRN partner, that's not even the issue here. The issue is that you as a consumer, you as someone who wants to learn how to trade, that acid test that David just gave you is like, okay, well, that really looks great. And we can see that that's what happened, but is there any way that you could know that was going to happen or have a reasonable expectation that that might happen before it actually happened? And as you shine the light of day onto a lot of these things, right there they start to fall apart, okay, because they won't bear the light of day. But I'm sorry, I didn't mean to break in on what you were saying, David, but I'm so passionate about this very subject, so go ahead.
Mm-hmm. Yeah, no, it is what it is, and you find over time as a person that's interested in markets and somebody that is trying out different systems and things, that every system you purchase or get involved with on some level, whether you learn it out of a book or purchase it, in some way, shape, or form, it actually falls somewhere between actually giving you an edge and actually giving you an explanation. And there's a difference between an edge and a really good explanation for what the market is doing. Many systems give you a very good explanation and no edge. Some systems give you a very good edge and no explanation. That's where we really, that would be almost ideal. But the best is something that gives you an edge and an explanation for what the market is doing. But you want to watch out for that. And this is not only related to you looking out there to purchase or to learn something, but it's also regarding your own methodologies. Maybe you don't use anything. You've developed your own system. But believe me when I tell you, you can be fooled by this principle on your own without anybody selling anything to you.
Yep.
You can actually believe you have something of great value because every time it happens you can explain it after the fact, but in actuality it doesn't have any edge. It merely has a very good explanation. And I mean, I don't mean that sarcastically. It has a very good explanation that you can say, see, this happened because of this, this, and this, and there you are. Gosh darn, you're right. But it doesn't really provide an edge. And I have been down this path, and I have suffered the results from it because I was so enamored with the explanation that I didn't recognize how little edge it actually had in real time. And therefore, I spent quite a bit of time, honestly losing as I tried to cover that gap between the explanation and the edge. So at some point, there's a magic moment that you come to when you realize that this actually doesn't work as a tradable, but it's a very intriguing explanation for something. So ideally, you'd like to find something that gives you some explanation, but you want to have more of an edge. And an edge means it can be traded in real time.
Yep.
And as opposed to explained with even an intriguing or very interesting explanation. But keep an eye out for that, not only from other people's methodologies and systems. This is not to paint things in too bad of a light, but I believe there's many methodologies out there that are sold with the very best intentions. Not that they're even purposely doing this, but they haven't come to the point themselves, strangely enough, but it's true because it happens to individuals on their own without any outside influence. They haven't recognized themselves that their system offers an intriguing and good explanation after the fact, but does not provide an edge in real time. But once that intriguing explanation has been given, we tend to be hypnotized by that, and we forget that, well, there's really no edge at the moment. But we really get off on the idea that, wow, look at the explanation, it's beautiful. Let me give you an example. And again, not to offend anybody, Elliott wave is a really good example of a very good explanation with very little edge, if I may say so. Now, there are people, there are Elliotticians out there that will come jumping up and say, hey, man, I trade really good with Elliott, and my hat's off to you, and that's fantastic. But I'm only giving that as a rough kind of way of saying, well, here's a methodology that has an awfully good explanation, but very little actual edge.
Chances are that person is just a really good trader, and they think
Perhaps.
it's because of the Elliott wave that they're doing well, but it's probably got more to do with they fundamentally understand how the market's
Perhaps, and sometimes we do actually, there's a very good point even buried in that, which is that sometimes there are people who understand things that they're not even aware of themselves. As an example, Michael Jordan runs with that basketball and can do many things that he could never actually explain. You could show him a video of himself doing the run, right, of the run and the jump and that whole thing, and you could say, well, what were you doing right here? And he's halfway through the air, and he would say, you know, I don't know. I didn't even realize I was twisting my body that way or something, because it's all one big motion. It's really very difficult to break it all down. There are people who can trade in the markets that have picked up insights that are, for lack of a better word, nearly subconscious, and then they have a methodology. That's what we're saying here. And that the insight and the methodology, since the insight is somewhat hidden from the user, he's not even fully aware of his own insight. He then ends up, you know, not blaming, but ascribing his success to that methodology, which may in fact offer more of an explanation than it does an edge. So think about that. Take a look at your stuff. I got into that. I mean, I myself many years ago was in the camp of somebody who was continuously trading with fascinating explanations that had very little edge in real time. So, and there's nothing wrong with those because they can be very helpful in developing a real system. But there is something very wrong with being hypnotized by the explanation and not really noticing that there is no edge. So keep that in mind. And this is really more meant for people to look at their own work rather than to worry about what other people are offering so much. I think that everything that's offered on this program has to have an edge, you know, in some way, shape, or form, or Dwayne wouldn't have it on the program. And I believe that goes to guests and whatnot that he would bring on the program, because there has to be something useful in it. And even the most robust explanation for what the market has done can be absolutely devoid of any way of trading that explanation before the event occurs. In other words, you're just as, it's almost random. It's a coin toss whether or not it's going to happen or not, and then when it does happen, you can then show. And Elliott wave is one of them, but I do want to, I just want to say, my disclaimer on the Elliott is that don't worry about it. If you're an Elliottician and you're able to use it and put it together, that's fine. I want you to go as far as you can with whatever you can, but just keep in mind that this is a subject that isn't addressed very often. It really isn't. It isn't addressed very often. It's something that can be used against the buying public, and has been, but in the end, we all wisen up and we get around to using something that maybe has a really good edge and really maybe no explanation. But you know what? Man always loves a great explanation for things, and we might love it so much that we forget that we don't have any advantage in having that. So keep that in mind and see. I think the ideal thing, again, is to have an explanation and an edge, maybe 50-50, but I don't mind having, I don't think anybody would mind having a really good edge with no explanation. And you just go, you know what, this just works, so I'm just going to keep doing it. And that's just as well. That's actually better. That's actually better. Then you don't have to waste any time with, talking to yourself about explanations and coming up with reasoning and so on. And I have been caught in that many, many times. I mean, just for what it's worth, I've been doing this now for 23 years, and I do like to try to think outside of whatever box I perceive, and have found very interesting things along those lines. But as to what I can actually trade, those are much more limited than how far I've gone out mentally and outside of the box and stuff. The number of things I can do in actual real time with trading is less than the things that I can offer as explanations. And that's the way it probably should be. The really good stuff might not even have an explanation, so I don't have to repeat it too much. So keep that in mind and take a look at your own work. See if that's something
Now,
that's...
another thing you got to watch out for, guys, is be careful on this, is somebody will present you with some methodology, and we're not picking on other people's methodology, so you'll think we're the great, or at least, no, David's not.
No, I'm not.
Neither am I, that we're the only way to skin this cat, poor cat, or that we're the greatest that ever was. No, just cautioning you, okay, some common traps that you can easily fall into. And one, because of the technology that exists today, someone can present you with a thing, whatever that thing is, and you can watch a video of them trading it live in real time, and so you go, I saw them trade it, and that works really good. It was 9 times out of 10, whatever they were touting. Okay, but when you watch a video of somebody, you don't know that they're trading it live in real time. Well, yeah, I saw the little bars bouncing up and down. Most platforms come with a market replay module, which allows you to record market activity just like a VCR, and then you play it back. Now, if you already know in this hour that price is going up to here, okay, if you already have that information, you're playing it back, you come in with your platform and you trade that video. It's, how does the saying go? It's easy to be king in a land of one-eyed jacks. Now, I'm not saying everybody's trying to pull that wool over your eyes, but you need to be aware that that wool exists, that can be. It's very easy. You don't have to be, some really talented guy with recording equipment and photoshopping or edit. No, you just make a video. You know what the market did today. You make a video, and then you pretend that you didn't know ahead of time what was going to happen. I mean, it's the oldest trick in the book, except some of the technology they used to do that particular variation of the trick is new. So you just have to be, unless you actually in real time see them trade it in real time, you'll never know for sure if it was actually traded in real time. Yesterday, as price was approaching this little area here, 16.125, and we went over here, we watched this happen live in real time. It was on my charts, it was on your charts. We gave an explanation as to why we thought that area would create some downward pressure. There'd be an opportunity for a trade. We thought they'd come in early, and we talked our way through that thing. And those of you who were here, you were watching your charts, you were watching my charts. And again, that's just a simple little thing. That's just resistance in the market. It's no big secret, but it's real. See, you were able to see the reality of that. And so if you're going to spend money on any kind of a trading system, you need to vet it, okay? Make sure that whatever it is you're being told is actually the truth. But then I think David touched on something that is even more diabolical than some vendor that might want to separate you from your hard-earned money, is the self-deception, okay? I can't tell you how many times in the early years that I went to bed so excited that I literally could not sleep because of this thing that I had just discovered in the market. And I had looked at it, historical charts, man, I probably spent Lord knows how many hours, the previous day or night, and I was just all over it and so excited, and I tested it and back tested it and looked at it from this angle and that, and I went to bed floating on a cloud because I had finally solved the mystery of the universe, and from this day forward, man, I'm going to just kill them. But then the next day, when the market's open and I start trying to recreate that thing, it's like it didn't even exist. And you're scratching your head. You're going, wait a minute, last night it was so perfect. See, that's the benefit of that after-the-fact stuff, okay? It's all about the hard right edge of the chart. And so save yourself a lot of, letdowns and just having your expectations crushed. When you're building something yourself, when you're researching, you have to maintain a very critical eye, not just at what somebody else is trying to show you, but at what you're showing yourself. David, you brought that up, and I think that was it was really, we haven't talked about this in quite a while.
Mm-hmm.
I do bring up warnings from time to time about, stuff that's being sold, and be careful, but you as the individual, when you're developing, don't, because a lot of times I get phone calls and emails from people. They're so excited because of this thing that they've come across, and you know what? It might even do well in the market, in the live market, for a couple days or even a couple weeks, and they're just over the moon. And I don't want to rain on their parade. I don't want to be, the guy, but I have to be that voice of reality sometimes for people. I have to say, hey, calm down, okay? What you've just experienced over the last couple of days, that is not ordinary, okay? You hit a spot here, whatever forces came together to create this, okay? You may be onto something, and let's follow it through, and let's work it, and let's watch it, and let's monitor it, and let's make notes, and let's track it, but don't sell your soul just yet, okay? Let's see how this thing plays out. And sure enough, in most cases, I end up with a phone call or an email 2 days later, a couple weeks later, and they go, hey, man, you were right. Thanks for bringing me back down to earth. I was ready to just bet the farm, mortgage the house and do the whole nine. And, thanks for helping me to see the reality of that, okay? I mean, we're always on the lookout for, some new way to skin the cat, I suppose. And I don't know why, because we already have plenty of ways. We got more ways to skin it. We got more ways than we got cats. And David probably does too, but yet he's kind of in the periphery. He's always kind of just looking over the horizon or trying to see around a corner, because it was just a couple years ago that he came up with his method for doing the roadmap. And here's someone that already had a very successful method of being able to trade in the markets. What in the world is he doing looking for something else? Well, I don't know. Maybe he wasn't even looking. Maybe it just appeared. I don't know.
Not to discourage people for experimentation and looking at the markets and playing with ideas. None of this is designed to discourage you. I want you to be as happy and as excited as you want to be. Just make sure that there's, like in any endeavor in life, there are traps that you can fall into. And in this endeavor, in the endeavor of markets, unfortunately, the traps cost money. So, and it's funny, we can be very, I think of myself as smart enough to, I would like to think of myself as smart enough to catch, here's a better way of saying it, it seems like I should have been able to catch the trick I was playing on myself without knowing it, about the explanation being so good that I didn't realize it didn't have the edge. But it's just, that's how things work, and sometimes there's parts of us that don't want us to see, and we want to hope, and so experiment voraciously, and then just realize that in the end, the stuff that really does work, the stuff that is actually tradable in real time, is always going to be a smaller number of things than the explanations that you have. So it's a good study. It's a good thing to look at, and we'll go from there. Anything else, Dwayne, and we'll move from or go on to the S&P or on to other markets?
We're sitting up here at this weekly zone, guys, 37.38. Now, I made the mistake last Friday of going, hey, it's a Friday afternoon, I don't expect much to happen. And then during the coach's corner, we got this big, huge red candle right here. So I'm not going to say that this Friday. I'm not going to say it's Friday afternoon, it'll probably be quiet, nothing will happen. Because I was reminded last week that anything is possible. Okay, now, we were trading this live during the coach's corner, so it was fun. But now today we're sitting right inside of this weekly zone, 37.38, and the market seems to be comfortably numb right here. We've been at this area for going on 3 hours. We got no more news coming out today, nothing that I know of to move the markets. But again, if we end up closing here, we'll look to trade higher on Globex Sunday night. We'll be tweeting it live, the S&P, so join us. The only thing that would change our outlook is if we get back below this number that we tweeted last night, 1633. If we close today below 33, then we may have a different outlook on the Globex Open Sunday night. And if so, I'll send that out. But otherwise, we'll just look for it to continue to drift higher, I guess. Let's look at this real quick on a daily, because we're looking at an hourly right there. S&P, we'll go to the daily chart. Here it is. We're right back up at the top of that channel. Remember, we had the little trap, we sold off, got back to the middle of the channel right there. It's a 70-point channel, 35 points into the middle. Now we've bounced right back up to the top. This would be an ideal spot for the market to get turned down for a test of this low and or a deeper retracement. Okay, so bouncing back to the hourly now, getting below 33 would be the signal for us right there. It's 33 right there. So watch that. And otherwise, other than that, I don't have anything else for the S&P. We had a beautiful move off the weekly zone at 15.10, 15. It's a nice little run up today. Those of you that were able to participate in that. That was a 200-point move in the Dow. Okay, and there was a confusing tweet on that last night. I'll try to explain it in the blog post today. But David, I guess we can move to gold. That's what you want to go to right now, correct?
Yeah, I was just gonna finish up real briefly, just with the intraday S&P and a little bit on the longer term. So, you know, it's very likely that a bottom has been put in. The thing that got us into that whole subject that we were just talking about was the fact that the whole idea of the market missing a level and being able to say later, well, we've had a very large move up, and now you can say, well, see, they missed this level, and that's a sign of bullishness and so on. This is something you've heard me say many times. There are rare times where you can actually see that in real time and actually put a trade on based upon it. But most cases, you cannot see it in real time because you can't be sure that the miss isn't going to be fixed an hour later by a subsequent bar. So it's a great explanation, but not very tradable. That's how we got into that. Having said all of that, we do have a very big up move. It does explain, and it has on many occasions, when the market is unable to reach these natural levels, it's very likely we have an important bottom that is in the market. But in our institutional meeting this morning, we do have something coming up in a couple of weeks here that is very important for the S&P. And as we get a little closer to that time frame, we'll talk a little bit about it. It might be useful for the listeners here to hear about that and watch that. But I will give you the date right now, which is the week of June 24th. So it's actually plus or minus a week in time, but that is going to be something that we're going to trade into. If you'd like to hear more about that, you can call us toll-free, 888-231-4702. Sign up for a couple of weeks of our institutional stuff. Just to listen in, you don't have to buy anything. You can simply just check out some of these larger trades that are potentially, with options, you could trade them and so on, and many of us do. Okay, so we'll move on. Let's take a quick look right now at the gold market. Now, I've got a few things I'd like to say about gold. One of them is that on this program over the last week or so, and I'm pretty sure I mentioned this because it certainly is something that we've been looking for. We had been talking about the failure at 1414 as a tradable short entry for the market to ultimately get down to 1378. So the trade was short any daily close below 14. This is August gold, by the way, Q. Short any daily close below 14.14 for a move down to 1378. Today we made a low of 1377.10. This is a trade that happened a number of times back and forth, but unfortunately they took the starch out of me yesterday when they spiked up to 25 and closed back below 14.14. I couldn't get myself to get back in for the likely rundown, and that's because normally the 1378 would have been reached at least a day or two prior. So because the market did what it did, it ended up going to the number and doing everything it was supposed to do, but they had shown just enough tricky behavior prior to completing it to get me out. And that's not normally what you see happen. This isn't a big move. This is, normally you hear us say, hey, the market's always tricky before a bigger move. This isn't that big of a move. This is a reasonable size move. But they were tricky, and that makes me wonder if the move is really over yet on the downside, even though they've completed the 78. I did mention on the radio program that that's what we're looking for. So they've completed that. We'll see how they finish this whole thing up, because there's certainly going to be very tradable moves in gold. And as I've said before, our longer-term outlook for gold includes not being longer-term, not adding any new longer-term long positions until after this month ends, and that would put us into the third quarter. So we'll continue to watch gold, and we'll have stuff certainly next week for you. I really would like to encourage some people, if you have an interest in any of the ideas of maybe selling put premium, selling call premium for bigger moves, because we have stuff coming up into next week that could be could give you another avenue, another income stream, so to speak, off of utilizing the markets in a different way. Just utilizing different instruments, as an example, options, which we do ourselves. Okay, so let's move on from that to the U.S. Treasury bond market. The people who are listening who have reflected wave know that yesterday was a reflected wave top for the bonds. They had a big slide back down today and completed some important levels on the downside. We're leaving this alone for the time being, but I want to re-encourage people to get whatever 30-year or car loans or whatever you're going to do done soon, because I am concerned that the bond market has just about overcome the $60 or $80 billion a month that the government is putting into it. We still may have another rally. We could, but I'm just saying, over time, I've gotten to the point where I'm starting to believe that that isn't having the same effect that it used to, or potentially it isn't. And
when's rollover, David?
For the bond markets?
For the bonds, yeah.
September, I think the bond markets are the same as the S&P, at least the second Thursday. Okay. I believe so. We'll see. Anyway, so we'll move past the bonds right now, but they've had a pretty good down day here off of that. And this is how we utilize reflected wave, is we set up a turning point and we attempt to trade in the opposing direction. That's one of the ways. There's many other ways that we utilize it, but that's one of the basic ways. Okay, the euro. Everybody loves the euro. Euro's had a great advance here. We have a lot of indications into next week for potentially for the euro here. So I would suggest that we're going to give those indications out. I can't give them out right now because this is a subscriber-based thing, but I will tell you that there's a real possibility for an important reversal in the euro. So if that's a teaser, maybe that'll get you to come and you can check out the full indication for the euro. I've also on this program, have talked about you selling put premium, along with Bert Schlichter, who can put these together for you, in the crude oil market, because we believe that April is a very important month for a bottom in crude. The on-time month was May, but we know that it came in April. And what we believe is that the market's going to continue substantially higher from here, so higher gasoline prices. And why not take advantage of that and make some of that money that you can then put into your gas guzzler truck that you've been driving around? The one that gets about 11 miles per gallon. that would be a good way to get that money, is by selling put premium in the market for a multi-month advance. I do want you, before you do that, to talk to Bert Schlichter. He knows exactly what I'm talking about with this outlook, and he can help you put those put the puts on. Funny statement, put the put, and you can then take advantage of that. That'll get you just enough money to fill that tank up for a couple of weeks, so you can just, or a few months maybe, to just keep that thing rolling down the road, real pretty like. Okay. Not everybody has a truck that gets 11 miles per gallon. I want to clarify that. Some people only get 8.
That's
so,
true.
Okay, I know of some high-end sports cars that have 12-cylinder engines that get better gas mileage, that have 700 horsepower, they get better gas mileage than some trucks. So trucks are very valuable, very practical things to have, but boy, they're expensive to run and drive around in. So and they're going to get more expensive if gasoline prices do go higher, so keep that in mind. If you want to check out something interesting, and just as an aside, the guy that was the driving force behind Chevrolet's Volt, the car that has the gas generator and the electric propulsion unit built into the same car, he started his own company called VIA Motors, VIA Motors. And VIA Motors is in the business of electrifying with a Chevy Volt type of gas generator and battery setup for trucks, and specifically for all the GM trucks. So think of all the different, GM has the vans, they've got the 2-door trucks with the big, bed, they've got the 4-door trucks that have the nice interior but then a shorter bed, whatever all the names of those are. This guy is electrifying them with very sophisticated technology that you might be interested in checking out. Because if you drive 50 miles or less a day, these trucks will do that on electricity. And then every mile after that, you sort of average it in, and you're getting 80 miles per gallon. Then if you drive a little further, it actually works out to 70 miles. But however many miles over the electric range that you drive per day, that starts chewing into your gas generator, and it still does very well on the gas generator. So that could save you some money. Check that out, VIA Motors. The fellow's name is Bob Lutz. You can check that out, see if that's interesting to you. Trucks are not inexpensive, but you still may have an interest. Somebody may. He's going to be producing those soon here, and I've seen demonstrations of them and stuff like that. Because I have a little thing for electric vehicles. And by the way, not because I'm Mr. Green and want to save the environment. I don't want the environment polluted, but it's not something that's at the top of my list that I think about every day. What's at the top of my list is how can I have the most fun getting from my home to my office, because everything else is work once I get to my office. So what can I do to have the most fun? And driving electric cars is the most fun. That's why I'm interested in it, because it's a blast. Okay,
here we go.
so
Here's VIA Motors right here.
Yeah, there you go. This is the site. See the trucks down there? There you got your truck, your SUV.
Electric horses.
Yeah. And this guy is a real mover and shaker himself, Bob Lutz. He really did some great things for GM, and I think he still is, either on their board or something.
Oh, it uses a standard outlet. You can use
Yeah.
a standard outlet, or charge faster with the 240.
The 240. That's correct.
So you
So
can gas it up.
you can gas it up. You can drive solely on the generator. You don't have to charge it, just like the Chevy Volt, and it'll go. The Chevy Volt is advertised to go about 38 miles. It'll actually do, or 35 on the year that I got. It'll easily do 48 to 50 miles every day on pure electric, and I do it every day. So
Now, what's the story on this here? Exportable power for the work site?
yeah, that means that you can use the battery in the truck
I got you.
as
Okay.
a power source for tools and other things, which is think about this. Think of how useful and practical that would be to be out at a site where you have power to charge your tools or to actually run your tools right from the truck itself, because it has a really heavy-duty battery, which is the thing that runs it. So it's very usable. You're going to see more and more of this, and Tesla, the car company, they're going to have their own truck that they're going to be manufacturing coming out that's going to be Tesla-powered as well. So keep an eye on all that. So crude going higher, and look at I'm telling you, yesterday was one of the biggest days. Yesterday was the best trading day of the year for me in terms of how many markets were moving, how many indications were being fulfilled, and even into today. we really have a lot of stuff that potentially is going to happen into next week. We've got a lot of indications. Crude oil this week has had one of its biggest up weeks in quite a while. So not the biggest, but a very big one nonetheless. Okay, so we'll move on. So watch your gas pump for crude to reflect in the gas pump here. Okay, let's see. Anything else of interest in this group? We'll pass by that. Tesla's having a decent day up today. We're going to continue to watch them, but I've got nothing really new to add to what they're doing. Anybody that owns a Tesla car can drive across the country for free. You can drive anywhere for free. You never have to pay for even electricity. It's one thing to say electricity is way, way less than gasoline. It's another whole thing to say that electricity is free, and you can just move your 5,000-pound car from here down there. I used to say a long time ago on the radio, I said, you know, when gasoline was $4 a gallon, you know, if somebody came to me and if I brought somebody over and said, listen, I've got this 4,000-pound object, I need you to move it 25 miles that way. Can you move it 25 miles for me? And the guy says, yeah, give me $4. I'll move it 25 miles. Seems like a pretty good deal. But actually, it isn't such a great deal anymore, is it? Because we can move an electric car from here 25 miles absolutely for free, or we can move it for at least just what it costs to charge the battery to move it there, and that's just pennies. It's just ridiculous how less expensive electricity is than gas, and hopefully it'll stay that way. Some of you live in states that electricity is very cheap. As an example, Arizona, it's pretty cheap, I believe. Out here,
I don't know, David. My electricity bill, I don't know what the per kilowatt hour rate is, but I know my electricity bill, they seem high to me.
Well, you know, if you're under, if you're at 12 cents or under, you're considered cheap, 12 cents per kilowatt hour. Okay. Out here, we get down to 9 and 8, and you can charge your electric car. You can set it up so that it only starts charging during the late night and where it's getting the really cheap electricity. So I don't know what you have, but we have Hoover Dam. How you doing? And so we're right next to the power source itself. And so in Las Vegas, it is very inexpensive to utilize electricity. Even though it's gone up over the years and all that, it still is pretty darn cheap. By the way, Warren Buffett, I believe, either purchased or is part of the purchase of Nevada Power. So he thinks Nevada Power is going somewhere. So he bought it, or bought a portion of it. Okay, let's see what else. We had a big decline also in the dollar yesterday. We do have a setup on this. I'm just going to go right over this. I mean, go beyond it, because we do have a setup in that I'm going to save for the people that take the trial and so on. Cocoa, we had a beautiful trade this week in cocoa on the upside, and it continued to move. This is one of those situations where a person could say, well, you know, gosh, I missed a big portion of the move. Yeah. But you were good enough to get, instead of poisoning it, you were good enough to get that piece you got. And let's work on improving that, rather than like a little baby sitting around and complaining about what you didn't get. The easiest thing in the planet to do, think about how many people would never have achieved the heights they did if they spent all their time complaining about what they weren't able to do. They wouldn't have achieved those heights. So in order to step up and get yourself better, it would be much smarter for you to look at the capabilities that you do have, whatever limitations they have, and be happy that you have those and improve on those, rather than focusing, might I say, like an idiot, on what you didn't get. That's the easiest, stupidest thing to do with your time, is to focus on what you didn't get. Why not look at what your skill set was capable of getting you, and then say, now let's see if we can very carefully improve that while still managing the risk and so on, and forget what you missed and all that. The reason you and I focus on what we didn't get is because we're greedy little people first and traders second. It would be much smarter to be a trader first and a greedy little person maybe fifth. That might help your trading, because that greed not only poisons the trade while it's underway, but the greed also poisons the after the trade party, doesn't it? It's like having a party celebrating and somebody comes in and, you know, parks their truck in the middle of your living room. That's what that's like. So catch yourself paying too much attention to what you didn't get, focusing on it, being upset about it, rather than encouraging yourself based on the fact that you were able to get something out of it. Maybe you made $1,500, you know, I'm just throwing a number out there, this month in trading. At the end of the month, your statement's up $1,500, and you review things and you think, boy, if I would have got this, this, and this, I would have been up $5,000. Well, you can obsess on that and really, you know, burn some good energy up obsessing over that. Or you can say, isn't that something else? I've actually got myself to the point now where I can do 1,500. I'd like to see if I can maintain that and maybe improve it. So that's a very good way to stair-step yourself up to greatness, because you're not going to stair-step yourself up to greatness by whipping yourself about all the things that you didn't get. I mean, you know people that do that, and a lot of them don't have very much going on. All the people who complain about what they don't have, how they missed the opportunity, how they were this, that, and the other, those are really excuses. And excuses are necessary in rare instances. But if you make a living making excuses, then you're not making a very good living, I can assure you, whatever endeavor you're in, whether it's trading or not. So anyway, we got a nice piece of that. We didn't get the whole shoot match. Go ahead.
Ed, thanks for that. Ed pointed out that the bonds, they've already rolled. Today in bonds, there's 488,000 contracts traded in the U contract. And if we go back to the previous contract, that one that's dead in the water. It only had 4,000 contracts today.
So we must have rolled recently with some of the other markets that rolled recently.
Ed, what day? What's the official rollover day for the bonds? Do you have that? So see, we got 4,000 in the old contract, 488,000 in the new contract. That's a pretty liquid contract.
Oh, bonds are very heavy.
We're starting to watch the dollar a little closer. A lot of guys have an interest in it because the intraday margin is only 660, and the overnight margin is only, I think, 1,300. We looked it up today. Correct me if I'm wrong, Bert. And it's $5 per tick. So for someone who's just starting to kind of get their feet wet with trading, it's starting to look like it's not a bad market to do exactly that, to try to kind of get your feet at $5 a tick. So
Bert texted me here and says he's going to, let's see, I'm going to read the text. I'm going to get some drinks because I'm really burned out at the office here and want to go to a bar. Okay. No, actually, he didn't say that at all. He said flip the bonds to September. We already rolled, and next week the currencies. So
all right,
that's
good.
great. I'm on radio, and I can just tell people things that Bert said that he didn't say, and he has no way, unless he comes onto the radio, of denying it. All right.
Eugene says it was May 31st that they rolled.
Oh, beautiful. I do want to point now to a market that we did get it right in, and we're able to get a good move out of. It's a beautiful setup. It won't always be this nice, but we're out looking for these types of setups. This is in copper, a market that many of us don't trade in. Many traders don't trade in copper, but very volatile, much more volatile than the S&P all times. I would say that over a long period of time, the copper is much more volatile than the S&P, especially in the last 5 or 7 years. Reflected Wave, anybody with Reflected Wave knew about the June 5th top in copper, and we had a forecast out, which I can say now, to our followers for the institutional meetings, which I've invited you to come to, which that you could sell short between, I think it was around 338 to 336. You could sell short in there for a decline to both 331 and then a further decline to 326. And today, if you take a look at copper, this is the second day after that indication was given. Copper's low today is I believe it's 326.10. So the whole thing was completed. This is really a Picasso, a Mona Lisa picture, perfect type of trade setup from a reflected wave top to a roadmap bottom. And the volatility that's required for the market to make that kind of move is easily providable by the copper market. So, if you haven't looked at copper, check it out. Take a look. There may be something there. It's a thinner market, but it is definitely tradable. And we have some further indications. This is an indication that was given out on our institutional product. Again, you're welcome to give us a call, 888-231-4702, if you want to get in there for next week and listen to some of these and see if these have some value to you. I'd like you to, if I had my way, take some of the really longer-term stuff, the monthlies and the weeklies, and sell some options. Do what we do, sell options, and use that as a backdrop, not stop doing what else you're doing. You can trade, we all trade intraday and all that stuff, but use these options as a backdrop to sort of a bigger, sort of a platform, so to speak, for your other trading. Those options are back there cooking away every day, hopefully working for you, and you're also trading.
What's the downside on selling options?
You can lose all the money you've ever made in your life and then be sentenced to a prison in a small off-the-net country where you would be working in slave fields endlessly in a dreary desert. That's probably most downside.
Okay, well, that's what
the downside is the downside is exactly the same as a futures contract.
Okay.
The futures contract, you're selling or buying naked. That means that it really means you have your clothes on, but that you don't actually own soybeans when you buy a futures contract, or you don't actually own copper when you buy or sell. So you're buying and selling naked. An option is the same way. If you sell an option, you are naked if you don't own the underlying thing, like a stock or something. And so if the thing moves against you, it can move an unlimited amount against you if you were not using stops, the same way of futures. So that's basically it.
But you can use a stop just like you do with a futures contract.
Absolutely.
And you can say, I can't take any more pain. That's it. I'm done. I'm out. And
yep.
Okay.
Yeah. And by the way, that's a good line. I can't take any more pain. That's potentially that you could find yourself saying that with a stop, but the purpose of an actual stop is that you know what your pain threshold is, right? And the people that end up saying, in many cases, I can't take any more pain, they didn't use a stop, and it's gotten so bad that they're now forced out of the market. And that's where your cripple. I know, and Dwayne didn't mean it that way, but I'm just giving an example. That leaves you in a position when you get broken like that, where they force you out of the market. I can't take any more pain and I'm forced out. That leaves you in a very bad emotional state. And so if for any other reason, putting money aside, just to not be in that state is a valuable thing to have a stop, just to not let yourself get into these crash and burn emotional states where you take a lot of time to get back on your feet and all that stuff. Listen, everybody has done it. Everybody who has traded has done it. I've done it. Dwayne's done it. Michael's done it. Bert has done it. The very best traders have done it. Everybody's done it. But the smart traders make sure they don't get in that position again, because once your head has been spun around and you really have crumpled your emotions, you're no good. You're not going to trade properly. You're going to have a bad time of it. And then you miss a lot of opportunities and so on. So
Ed says that you can get a lot of slippage on your stops with options. Have you found that to be true?
My answer to that would be because of the nature of options and the fact that they're not as liquid, you get slippage just as a rule. I mean, you can see the price on there and you go to buy or sell and you get a different price than what you see. Sometimes decently different price. So yes, I do agree with him on that. But when it comes to options, we're really doing something, that slippage is unfortunate, but you can do that and still make money. You can still suffer the slippage and still make money with options because you were trading on a longer-term time frame. The guy that slipped you or the way that it gets slipped, that's just the price of entry. But if we're going to be in it for 2 weeks, which in many cases we are, the market's going to be at a wholly different place at that point, and you're still going to have money to make. Listen, there's ups and downs on everything here, and his point is very valid that you are going to witness greater slippage just getting in and out of options than you will in many other instruments. So that's absolutely true. And then certainly if the market's moving fast, it's basically a license to steal. If you find yourself having to get out when the market's moving fast, you can be slipped more. So those things happen. But having said that, I want to counter that with April of 2011, we started trading after our first seminar for reflected wave. We started using it and trading. And since then, we've accumulated, and admittedly, we started with a decent chunk of money in the account, but we've accumulated more than $260,000, real money, in an account, doing nothing but trading options. And we're not buying those options. We're selling them. We're only sellers. We're not initiating a trade with a buy. So yeah, there is definitely something that there's something to say. Listen, we were slipped on every one of those, Ed, as you know. Every single entry and every single exit we were slipped on. And that's just the nature of it. But we're in long enough so that that doesn't matter in the end. If we're right about the trade, and we're not every time, if we're right about the trade, you know, we're way ahead. We get way ahead of that slippage. So hope that's helpful, and not to worry too much about that. Okay, so beyond copper. Oh, by the way, we have some interesting things coming up in copper as well that we're going to talk about in the institutional meeting. So if you have an interest in trading the next move in copper, take a look. One thing I will say for the program's sake is that we had forecast that May would be a bottom in copper. Anybody with reflected wave knows this, and we're looking for a multi-month advance. So we are looking for higher prices in copper over time here, substantially, by the way, higher. Let me think. If there's anything else that we can talk about. Natural gas is going lower today. We'll talk about that. I'll let you know this. I think natural gas is likely going to bottom next week. So I wouldn't do anything with it right now, but I will into next week. And there's a price level associated with that bottom, and you can come to our meetings and listen to it. I'm sorry to have to keep saying that. Okay, and I think, honestly, Dwayne, other than soda and some of the other stuff that Robin would be the one to talk to here, we're probably good to go here. I don't think there's anything else. Oh, one thing I did mention on the program last week, and I think this week, is that, and anybody with reflected wave knows this, that the week of May 27th is a bottom in the Mexican peso. Mexican peso. Now, when's the last time you traded the Mexican peso? Probably last time you were in Mexico, because you need those gosh darn pesos to buy stuff there. Or maybe they do the transfer thing right there when you buy it at the table, but it's a good idea to have the pesos. Well, we think the Mexican peso is going to have a multi-week advance, and it's going to go zipping up, and you could make some money from that. You could do what some traders do, which is actually buy the whole peso. There's no leverage there, but there's also the opportunity to, you know, simply own the peso and be in it for a few weeks, take some advantage of that. Some people do trade that way, where they actually own the actual currency. But we don't talk about the peso a lot on the program, but maybe if you want to, we can start looking at it more, because we think some of our professional traders do trade the peso. And to be honest with you, up until just a few weeks ago, I never even thought of it, never even considered looking at the peso. But here we are. Yeah. It's one of the markets we might want to look at.
Over the last few years, it's been one of the more stable currencies worldwide. It's fallen on a little bit of difficulty here of late. The problem with trading the peso is liquidity. Bert, do you have the peso? Do you have the peso symbol handy? I'll bring it up real quick, guys. I'm gonna send out a tweet on the natural gas here on the short side. You can see where I'm headed with this. We had support. We've broken that support now, so we're going to sell this pullback to the support line. I'll put the actual numbers in a tweet, and then I'll put it on the blog as well. Probably won't get triggered into that today. It'll be sometime next week. But keep an eye for that. If I forget, send me an email. If I forget to send it to you. Bert, you got the peso there handy?
He's not paying so much attention. Little joke there. Pay so much.
That's pretty good. Oh, here we go. 6 mm. I got it. Never mind. Thanks, sir. He's busy on the phone. Okay. So, well, it actually looks like it's got volume.
No, it's decent. It's decent. We have people in it right now.
Contracts. Okay. Let's see what sort of a spread there is between the bid and the ask, if there is one. Okay, so yeah, there's 32 contracts on the bid, 22 on the ask. The next position out is 136 and 171. So, are you there at all, Bert, or are you still on the phone? I guess he's still on the phone. All right, well, we'll take a look at this some more next week, guys, but this is what it looks like. Right now, you get 7.83 pesos for a dollar. That's the exchange rate. Like if you were to go down to Mexico right now and hand them $1, they would hand you back. Well, the currency, the cambia, the Cambia, whatever it's called. They got to make their money, so you're probably only going to get 7 pesos for $1. I only get 6 because they've got the person doing the exchange. They have to make their money. So the liquidity, as we can see here on a daily chart, okay. Oh, let's do this. Let's look at hourly, and we can see what time of day this thing is actually active, and that would give you an idea of when. Okay, we got a big hour here. That's at 7 a.m. Chicago time. Now that's an unusual move there. Oh, look at that thing. Let's go over here. 7 a.m. Chicago is a big hour. Okay, that's when it kicks off, it looks like. It's pretty active from 7 a.m. Chicago time until 1 o'clock Chicago time every day. That's when, see, like this hour is 5,000 contracts. Well, let's look at today. Forget that first hour. That had to do probably with the unemployment, I guess, or something. Some news in Mexico, maybe. 6,000 contracts that hour, 8,000 that hour, 4,000 that hour, 2,000 that hour. So, yeah, I mean, it looks like there's no problem with the spread, I mean, unless you're trying to trade more than 30 contracts, at least right now. I mean, if you're trading 10, it doesn't look like you'd have any problem at all between the bid and the ask.
Well, we haven't had any problem with it. It's pretty good, actually.
Have you actually traded it?
Well, we haven't ourselves, but we have institutional clients that are trading it, and they haven't had any problem.
But are they trading it? Are they trading intraday, or are they trading in larger time frames?
Larger time frames. They're in and holding for multi-day, or potentially, in this case, multi-week, actually.
Gotcha.
So, yeah. And I think that's everything we have right now, Dwayne, for the market. But we'll continue to watch the peso, and S&P, as we're talking here, is going back down. If we were to test, the 1633, 1634 level and close above it, it's likely we could, do something with that on the upside. But we're sort of in the dead zone right now with the S&P. This is a normal decline, very normal, that we're seeing so far, and we'll continue to watch this. But I'd like to wish everybody a wonderful weekend, time away from the markets, and just some nice time off. And I'm looking forward to next week, because there's actually a number of very powerful indications, especially considering that this week had so much volatility. There's going to be a lot of good tradable reactions off of many of the things that we saw happen. So have a wonderful weekend, everyone, Dwayne, everyone else, listeners, and we'll be back next week for more fun with the markets.
All right, Dave. Have a great weekend.
Thank you so much. I'll see you guys then. Have a wonderful weekend.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you. Every day's a new day in love with you. With each day.
Okay, guys, that's going to pretty much wrap it up for us. I ran video, let's see, Tuesday and Wednesday, I believe it was. And I ran video yesterday, but it didn't render. And then today, I didn't run it at all. But I will get Tuesday and Wednesday's video posted. The final 30 minutes of each of those shows, there's some really good basic technical analysis information for you, just demystifying the markets, understanding support and resistance, how to trade it, okay? This is something that not only gives you an edge, but something that you can understand, okay? It makes sense. Don't ever fall for that mysterious stuff about, there's logic in the markets. The market is made up of people. And you're going to go, well, wait, but there's machines. 70% of the trades are machines. I know that, but those machines are programmed by men, okay? There's human emotion. There's fear. There's greed. There's other motivating things. And so the market participants are men, or men disguised as machines. And so they're going to make decisions to buy and to sell based upon the reasons that people buy and sell things. Think about in your own life, whatever it is that you have to buy, and maybe you aren't in a position to ever sell anything because of the way your life's set up, but you can find parallels if you think about it a little bit, okay? So when you learn to understand, just like yesterday, okay, yesterday was a real, and now last week we spent a lot of time talking about buyers and sellers coming in early. We know ahead of time the area that's important, and we learn to watch for the behavior that shows they may be coming in early. And yesterday we were watching this move right here. We asked the question, well, will they come in early? And again, why would they come in early? Well, because earlier this week, when price rallied up to 16.16 and a quarter, it could not go any higher. After this decline, price tried to rally. It could not go above 16.16 and a quarter. It got knocked down for 8 points. 8 points is in the S&P. Okay, it's only $400 per contract. I say only $400 per contract. But if you have done the deal and earned the right to trade 10 contracts, just as an example, and what I mean by earn the right, well, you started out in the simulator, then you went to 1, then you went to 2, then you went to 3, always building on profits that you earned in the market. If you follow that process, okay, and you find yourself at, just as an example, trading 10 contracts, if you're comfortable there, if your account size supports that type of trading, then an 8-point move is a pretty good living. Okay, $4 grand a week, that's not bad. You know? There are places in the country where the per capita, or not in the country, there's places in the world where the per capita income is under $1,000. So when you put it in that perspective and see that this little move just right here, you know, is $400 with just one contract. Think about that. Half a man's annual wages on one contract on that move. It makes you stop and think a minute. You know? We have such an incredible opportunity in front of us. You don't have to go back too many years when this type of opportunity was not available to the average, ordinary citizen, man in the street. You had to go into the fields and plant something, or go into the woods and kill something, or go into the manufacturing plant and produce something. There was no just sit down at a desk, scratch your head, find a high probability setup, and put $400 in the bank. Half of some people's annual income. This happened over the span of 1, 2, 3, 4 hours. 8-point move. Okay. We're blessed to have these opportunities. Let's not squander them. Let's take them seriously. Let's use this opportunity wisely. Okay. So, 8-point move. All right. That's pretty important. The market's going to remember that. The market has an incredible memory. A day goes by. See, this happened at 12 o'clock on the 5th. We get back to this price at 7 a.m. on the 6th. Okay? Price tries, and then it gets knocked down for 20 points. On one contract, that's $1,000. Well, how do I get all, how would I, and I know the questions, well, how do I know when to get in? Where do I put my stop and what's my target? All valid questions. All beyond the scope of what I can explain to you right here, right now, but all the more reason to take the free trial and to consider becoming a partner so that you can learn those things, because those are things you can know. You can know where to get in to the tick. You can know where to put your stop to the tick. You can know what a reasonable target is to the tick. It does not have to be a thing of mystery that only the elect have that information. No, no, no. Okay, so they knocked it down for 20. So as it's coming up again, here's what we don't know what's going to happen. All we know is that man made money selling it at that price. And then man made money selling it at that same price. Man, being a creature of habit, is going to try to sell it at that price again. Trust me, they just are. Now, sometimes will they be overwhelmed by the buyers that are willing to buy it at that price? Sometimes. But look at this. We had an early indication right here. Okay? We got up to a swing high at 16, let's see, 13 and a half. We're still almost 3 points away, and it gets knocked down. Okay, but then it rallies right up to 616 and a quarter. It actually puts in a swing high at 1675. So if you got in at a quarter, you had a 2-tick drawdown to 75. But I'm not saying you should just sell 1616 and a quarter simply because it's a high probability setup. It is a high probability setup. Now let's use that. Let's use that to our advantage. We know it's a high probability setup that they are going to, that man sold this and made 8 points. Man sold this and made 20 points. Man's going to try to sell it again. Will he succeed? I don't know, but I know he's going to try. That's the key right there. I know he's going to try. Okay? So, as he comes in and tries, now there are those who would tell you that that information is enough. You don't need anything else, just sell that number. Okay? You can do that. And will it go in your favor a percentage of the time? Yes, it will. And there's nothing wrong really with doing that, but if you're someone who wants a little more confirmation, for lack of a better term, this little trend line that I drew here, okay? Once we close below the CFMA1, that's a good indication that it's heading down. Just getting just one candle closing back below this blue line, that's an indication, one indication. And then when it closes below this trend line, that's a second indication. So we have the number itself, we have a close below the MA1, and then we have a close below the trend line. 3 good reasons why you might want to participate in man trying to sell at this price one more time. Okay? It did fall 5 points from 1616 and a quarter to the swing low. But if you're using this type of confirmation to get in, you can't get the whole 5 points. Okay? But can you get some of it? Well, that's what you have to work on. Because if you have reasonable certainty that man is going to try to sell it at that price, and then you get confirmation that man is selling it at that price. See, on the hourly, we can see that man most likely is going to try to sell it at this price when it gets there. And then we come over here and we have evidence that man actually is selling it at that price. So at this point, all we got to do is get in. We're not orchestrating the move. We're not making it happen. We're just watching it unfold before our eyes, and I'll take some of that because, again, I'm only looking for a couple points. That's it. A couple points is, you know, I know that it's hard for some people to wrap their mind around, well, yeah, but it went 5 points. Why would I just settle for 2? That's crazy. Well, okay. When you figure out it's not crazy, come on back. We'll still be singing the same song. Now, this is not the only way to trade the market, don't get me wrong, and having a daily goal, a humble daily goal of a couple points, that's not the only way to skin that poor cat. There's other ways. Okay, I'm never going to tell you this is the only way. I won't even tell you it's the best way. I'll just tell you that it's a high probability way. That's all. That's all I'm trying to show you here and to share with you. And by showing you this and sharing this with you, that doesn't put any money in my pocket, right? That doesn't make me any money by showing you this and sharing this with you. So why am I doing it? Because I want to help you. That's the purpose of this radio. That's why I started this radio program 8 years ago. to try to help traders who are struggling just like I was struggling. Okay, that hasn't changed. Yes, we've developed an educational product, and a lot of things have happened in 8 years, but that core philosophy and the core reason that CFRN came into existence has not changed. So let's see if we got anything in the chat box, and then I'm going to head on off into the weekend here. Oh, I wanted to say this too. 1633, remember? We said that if price got back below 33, that would be the thing that would kind of get us interested in the short side. We said that going into the Globex open Sunday night, as long as the market's drifting higher, we'll go along with that. But that if price were to come back below 33, then we have to start thinking about the other direction. So now that it's gotten below 33, this hour hasn't closed, but it's now time to start thinking about that. Okay? Start thinking about what's going to happen. If we get below 33 here, look left. What's in the way of us going back to the zone at 24.25? Nothing. See, the low of this candle is right at 32.5. The low of this candle right here, it's right on top of the zone. That low is at 25.75, 3 ticks above. So you could put your line in the sand at, let's say you go 31, okay? Go 31. And then you want to make sure you're out before that, okay? Just in case it doesn't make it all the way back to the zone. So, yeah, like that, okay? All right, and so now this price is 1631, and this price is 1627 and a quarter. So let me just put the numbers on the chart. $16.31, and then this number $16.27.25. $16.27.25. Okay. So fancy math, 1631 minus 1627.25 equals 3.75. So that's how much room there is to run from 31 down to 27 and a quarter, 3.75. Is that a high probability setup? It is. In my book, it is. Is there any guarantee that it's going to do that? No. Best you can ever hope for is a high probability. Yeah, but I want to know for sure. Well, there is no knowing for sure. You got to get over that. You got to get beyond that. Okay. Look for something that gives you a definable edge, high probability. You'll notice that this doesn't involve any indicators. No squiggly lines. I got nothing against squiggly lines. We got some of the best squiggly lines in town, I do believe. Okay. It's just reading the chart and price action. Okay. Consider being short below 1631 with the target of 1627 and a quarter. If you only get part of that, okay, remember this is there's 3 3/4 points room to run. Almost 4 points. That's almost double 2 points. And remember, we're just looking to get a couple points, right? Okay. So let me tweet this thing. We'll go on the record. Somebody said something that got me to thinking about this old song, Cripple Creek Ferry. Up on Cripple Creek. Remember that song? Okay. Move that out of the way until the page loads so we can watch what's going on. Oh, come on. Come on. Okay, so the chat box, let me go to the chat box while that page is oh, there, it finally loads course. All right, here we go. ESM3. Consider being short below 1631. Target 1627 and a quarter. Okay, now if you're following on Sneaking Alpha, you should be getting an email right now. And if you're not following, I'm going to put it in the chat box. If you click on that link, you can go there and click follow. You got to have an account, but it's free. So, and then every time I send out an alert or tweet, you'll get a little email. You don't have to get, when you go there, you can turn that alert on and off, right? Like if you don't want to be bugged by the emails for a while, you're going on vacation or something, you can turn it off, and then when you come back, you can turn it back on. All right, in the chat box, where would you put a stop? Okay, Dan, great question. If you're going to get in at 31, okay, what I would say is go over here. You got to get to a smaller time frame. Here's the thing, okay? Let me show you. Boy, that looks pretty good right there now, doesn't it? We got bearish divergence. We stumbled right into this. Bearish divergence. Bearish cross. Price pulled away. Price pulled back. Market could hand you an entry right here on the slingshot. And what you now see, here's where you have to think, okay? And I'm not talking to anyone in particular. I'm just talking to the world in general. We said that 31 is kind of our line in the sand. That's where, and why is that the line in the sand? I'll show you why it's my line in the sand. Okay. Okay, so there's 31. So now if we were to get short up here at 34 on this pullback, we'd already have 2 points before we even got to the entry at 31. Well, what if we wait and let it close below the trend line? Then that could potentially put us in around 32, 33. But we still got to deal with 31. Okay, so now what's important about 31? See, if we get in here, we're only going to risk 2 points. If we take the slingshot entry, wherever it comes, the official slingshot entry, we never risk more than 2 points on those entries. So even though we're using this hourly chart to pick out our trade setup, our high probability setup, we can drill down to that slingshot and use that or some of the other tools that are available to partners to minimize or to aggressively manage your risk. Because on a basic chart setup, if you're going to short 31, your stop actually needs to be up here above the swing high, but that makes no sense. You're going to short 31, put a stop above 44 just to get down to 27 and a quarter. That dog won't hunt, as my old boss used to say. So we can't do that. So we have to go to the smaller time frame, go to the slingshot, go to something that's going to allow you to have reasonable risk. And I never recommend that you have more than 1-to-1. Now some say 1-to-1, that's not good. You need 2-to-1 or 3-to-1. Well, intraday in the S&P, sometimes it's hard to find that. I'm not saying you can't find it. I'm just saying, if you've been at it for any length of time. So the question now becomes, are you going to take the early entry, or are you going to wait for the confirmation down at 31? And why is that confirmation? How did I pick 31? Well, all I did was I looked at this low of this candle over here, and the low of that candle is 32.50. So I wanted a reasonable cushion that the market was serious about heading down. Now look here, see? We had a low here of 32.5. This candle just spiked all the way down to 31.75. See, if I had just traded a break of that low by one tick, we'd have already gotten triggered into this trade and stopped out, or close to being stopped out with a 2-point risk. So I give it some cushion, okay? I want it to kind of be showing me that it's committed to the move. Now that's no guarantee that it's going to succeed with what it's trying to do, but at least it's showing me a good attempt, okay? The old college try. So you have to ask yourself, see, right now you got an opportunity to get an entry here at 34, which personally I don't see any reason why you would want to do, at least wait for the confirmation of a close below the trend line. Now granted, if you get in up here, the market only has to fall to here. At this swing low, you're out with your 2 points if you get in up here. Say that again. If you get in up here, you're out with your 2 points by the time the market even challenges this little swing low. But at this point, you have nothing to convince you that the market is going to go down. In fact, look what just happened. The little black step line, it just crossed up above the BBC. And we know that that spells trouble for a short trade. And the reverse spells trouble for a long trade. What's happened is the little black line, the step line, has gotten pulled up into the BBC. That just negates the whole slingshot setup. Doesn't mean price can't still go down. It just means that the textbook criteria for the slingshot short trade no longer exists. Based off the hourly, still no trigger. Remember, the tweet said we want to consider being short below 1631. We haven't gotten below 31 yet. And it's possible that we don't get below 31. Let's do our fibs again. We'll take just the last leg, okay? That 31 sets right at a 50% retracement. From this swing low to that swing high, that 31 line I drew is dead on 50%. So getting below 31, you've still got this little challenge here at the 68% retracement, but we're only trying to get down to 27.25. Now that gives us 3 3/4 points. So what if you wanted to just pull the plug at the 62? In other words, what you're saying is I'm going to get in at the 50% retracement, a break below the 50% retracement, I'm going to get in there and I'm just going to trade it down to the 62% retracement and then I'm out. Can you do that? Sure, because the 62% retracement is at 1628. So if you get in at 31 or even 30, okay, let's say you want to let it get through 31, get in at 30 and then jump out at 28. So you're trading from below the 50 to the 62. You don't care if this thing bounces, you don't care if the bottom falls out. It's just a high probability opportunity to clip 2 points out of the market. That's what that is, okay? That answer your question, Dan? About to stop? If you were shooting for a big move, your stop would be up here, above the swing high. But we're not, this trade setup is not about a big move in the market. It's about just taking a little piece out right here. You're welcome. Any other questions, guys, about anything at all? Got a couple minutes. If you're in the process of typing something, just type typing and hit enter so that I don't run off on you while you're typing. I'll leave this chart up. There is no Coach's Corner today. Robin's out of town. She's in New York coaching. She'll be back next week, and then next Friday we'll have Coach's Corner again. I'll leave this chart up so we can see what ultimately happens with 31, 27 and a quarter. Well, thank you, Kellen. That's very nice. We'll do it again on Monday. Okay? I'll walk through this again with you on Monday. If you have a specific question, though, I'll be happy to address it right now before I go. Now, this is something, guys, you're seeing this unfold in real time. Okay? There's both a reason and an edge. We talked about that during the radio show today. It was discussed that you could have a reason or an edge, but that it was hard to have both. This is a situation where you actually have the reason, and the reason is what gives you the edge. The reason gives you the edge, okay? Does that guarantee that it's going to fly? No, it doesn't. Anyone who has not read Trading in the Zone by Mark Douglas, I may not have recommended it this week, but I've been recommending it ever since I read it. Now, I resisted reading it for a few years. Okay, when everybody was crazy about Seinfeld, I wouldn't watch it. When everybody was watching Friends, I wouldn't watch it. It was only after the fact, when it went into syndication, that I realized, hey, I guess it is funny, you know. Some weird quirk in my personality. But for a couple of years, people were telling me, hey, Dwayne, you know, you're struggling a little bit. Why don't you go read Trading in the Zone? It'll really help you. Yeah, I don't got time. Does it have a setup in it? That's what I want to know. Does it have a setup? Does it have like a special indicator or a time frame? And they would like go, well, no, it's not like that. Oh, well, then I wasn't interested. Because a bunch of psychobabble, how am I going to turn that into money? I needed an indicator. I needed a time frame. So a couple of years out of desperation, I broke down and I found the book in a bookstore here in town over at the Biltmore at Borders Books. I found one copy. The guy goes, I got one copy. I go, man, will you hold that thing? I'm going to drive across town and get it. He goes, well, according to the computer, it's been here for a few years, so I don't think it's going anywhere. I go, you know what? Would you just do me a favor and put it up at the counter and hold it for me, and I'll come get it right away? And he goes, yeah. That was on a Saturday afternoon. And I drove across town to the Biltmore, got the book in my hot little hand, and drove back out here to South Mountain. And I hunkered down over that book. And I'm telling you, I couldn't put it down. I finished the entire book Saturday night. And from that day forward, everything changed. Did I suddenly just start making a ton of money in the market? No. But the way I thought about the market, the way I thought about myself and about trading in general and about high probability setups, everything changed. That became the foundation of a knowledge of the markets. Okay? Because everything I had dealt with before was just smoke and mirrors. I finally had something that had meat on the bone, and ooh, baby, I sunk my teeth into that thing. Now, if you go to the bookstore like I did, it's going to cost you about $40. If you go to Mark's site, Trading in the Zone by Mark, there's two Trading in the Zones. Make sure you get the one by Mark Douglas. If you go to his site, I think he sells it from his site for $30, $40. It comes from Amazon. It'll come from Amazon, I think, even if you buy it on his site. Or you can download the audio book for free. Our sponsor, Audible, allows us to give you a free audio book. I'm going to put the link into the chat box. It's audibletrial.com/CFRN. Okay, I'm hitting send to all. You should have it in the chat box. Now, Audible, they want you to join their book club. That's where you sign up and you get a new audiobook every month. Now, I enjoy audiobooks. It might not be your cup of tea. Here's the deal. They give you a couple weeks free trial, and that allows you one free audiobook download. So when you go there, you search for Trading in the Zone, you download it, you can put it on your smartphone, your tablet, your computer, all at the same time. And as you move from device to device, it remembers where you left off, which is really cool. Now, anytime during your free trial, you can cancel. You'll never be charged a dime, and you get to keep the audiobook for free. That's our way and Audible's way of saying thanks for checking us out. Okay? Nobody's going to get mad. Nobody's going to call you up or email you and try to talk you into, not cancel. No, you just log into your little account on Audible and just say, I'd like to cancel. You tick the box, I'd like to cancel, and that's it. You get to keep the audiobook forever. It's about 7.5 hours. The narrator who reads the book, when you move over to audiobooks, the narrator is important. Okay? The guy that narrated Steve Jobs' book, I had a hard time getting used to listening to that guy talk. 27 hours later, I was pretty used to him. So you'll find certain and in fact, some people, when they get ready to make their selection each month for the Audible Book Club, they have a list of people that they like as narrators, and then they have a list of people they like as authors. And so any time that a book shows up on the list where you like the narrator, the person reading it, and the author, ding, ding, you know which book you're going to get that month. Okay? Because when you get like I say, the Trading in the Zone book, 7.5 hours. Steve Jobs autobiography, if you already have Trading in the Zone, you can go get a free book. You can get the Steve Jobs biography. That thing's 27 hours. Okay? You're going to be listening to that guy talk for a long time. Okay? It takes a long time to get through a 27-hour audiobook, especially if you fall asleep listening to it the way I did, because every morning when you wake up, you don't remember where you left off, so you got to spend time trying to figure it out. And then I realized that you can set a timer. Read to me for an hour and then stop. Okay? And usually within an hour I've fallen asleep, and so that worked out pretty good. So click the link. Now they're going to want your credit card or your Amazon account number to take the free trial. Don't worry about it. Audible is a respectable company. Amazon, they're part of the Amazon family. Just give it to them. Okay? And you're not going to be charged anything today when you take the trial. The free trial fluctuates between 2 weeks and a month. I think right now it's 2 weeks. So they're going to tell you on this date you're going to get charged $10 or $15, whatever it is, unless you cancel first. Get your audiobook downloaded, and once you download it, you can turn right around if you want and go back in and cancel. I suggest you give it a shot. I mean, let it, at least listen to the book. Maybe you might be an audiobook person. Maybe you're not. Okay? I'm not asking you to spend money on the book, I'm not asking you to become a member of the book club if you don't want to. What I'm trying to do is give you a $40 book for free. If you've never read it, even if you've read it, having a copy of it as an audiobook is pretty cool, because you can be standing in line or stuck in traffic. You can pop in your earbuds, pull out the iPhone or the Android phone, hit play. It helps being stuck in traffic. It helps it to be a little less frustrating. So, okay, back to the chat box. Is it setting up for a short on the 4-tick chart? Let's go look. Nope. No, because see, the black line pulled up into the BBC, and now we've got a bullish cross. Actually, it looks like it could go long here. So let's go back to the hourly. See, look what's happened. You see now that cushion that I put in there between that swing low right there on this candle and the line that we chose, the line we drew in the sand, 1631. See how price spiked down right in the middle of them, turned back up? So we never got triggered into that trade. Okay. What might happen is it might go up here. It could break out to the upside. We might end up with a trade on the long side. And we'll go through this a similar process to figure out where we're going to get long on the upside. We'll know exactly what our entry price is, exactly how much we're going to risk, where a reasonable target is. See, all those things can be known. You don't have to trade with unknowns. Take the free trial. Consider being a partner. Okay? Becoming a partner, that's a decision down the road. Today, if you've never taken the free trial, go to cfrn.net/apply. No credit card required. Get signed up. You have to click the confirmation link in the email we send you, because that's automated, okay? We don't believe in spam, so we use a double opt-in process. once you confirm that you want to take the free trial, the computer will tell me, and then I'll manually send you an email that has the link to the live trading room next week, a link to download the platform and install the indicators, and a bunch of videos to watch, and everything you need to get you ready for that live trading room experience Monday morning. And it all starts when you go to cfrn.net/apply. No credit card required. All right? So you do that, and then I'll see you guys in the live trading room on Monday. I'll be around. If you need me, you can always reach me by email, support@cfrn.net. Michael, you can reach 949-42 Emini. 949-42 Emini. Okay, just like it sounds. If you need to get a hold of Bert and Leslie, 866-928-3310. 866-928-3310. Okay? Price is back to the zone. All right? We've got an hour and 15 minutes before the markets close, futures markets in Chicago, but then they're going to reopen and trade for another hour. So remember last Friday afternoon, I had no sooner got the words out of my mouth, it's Friday afternoon, nothing's going to happen. We got this great big red candle. I'm not going to say that this Friday. I'm going to say embrace the possibilities, anything can happen. Okay? So if we break to the upside, there's already an obstacle that's been created. If we decide to get long for any kind of a reason, our first obstacle to the trade on the long side will be right there at that swing high. Okay? If this closes above, if this hourly candle were to close above the zone, and it's going to do in 7 minutes, we're going to get a new candle. Blow this up a little bit for you. Okay. Now, if price closes above the zone on this hourly candle, and if it takes out that, you could consider being long above 39.75. Let me write these down or I'll forget. 1639.75. And then this price, we need to come down at least a tick before that, before the high. So the swing high of this candle is 42.25. So I want to be at 41.75. 1641.75. 1641.75. Okay. That's 1641.75. Now let's do some quick math. Oh, I don't even need a calculator. That's exactly 2 points. From this line to that line is exactly 2 points. That's a head scratcher, because if I'm trying to get 2 points, I like to have, 3 to 5 points room to run. Now, you could say that, well, there's all the room in the world to the upside. Yeah, that's true. Let's go look at a daily chart for just a second. See, we're right up against that trend line right there. I mean, we got all this distance to go here before we get back up to the historic all-time high. So I agree, there is plenty of room on the upside. But here's what I would suggest. This 31 number on the short side will stay in play until the end of the day. Okay? There's nothing that would happen on the downside that would change my mind about this. This up here, this is a little tougher decision to make. Okay? Again, this down here is good to go till the end of the day. this, I'm going to let you make that decision. We knew a few minutes ago, remember, we were waiting for a potential setup to go short. But then our indicators told us, no, 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 there'll be no short here, not right now. And remember we talked about how we could have just sold this number the way some folks will teach you, oh, just park the order there. Well, why? Because if you parked it there, you got ran over like a steamroller, okay? Why not let the market show you, well, yeah, but they're supposed to come in there. Well, what if they don't? You know, I know they're supposed to come in there, but let me see them coming in there. See, we never saw that, okay? This little line went up through here, and I said it looks like it's going to turn into a long trade, and boy, has it. Look at that, okay? Now let's get the zone on this chart. What's the number? 37, 38. Let me drop these on here. 37, 38. Okay, so see, all we're doing right now is we're spiking this 37, 38 by a little bit. Look at what happened the last time we spiked it. See, always look left. I was pointing out at the beginning of the show a potential little head and shoulders pattern, but we didn't follow through with it. But it did actually break the neck. It did break the neckline, and it did make for a nice trade, but I didn't walk you through it. So now the last time we challenged this area up here at 38, look what happened. We came up, challenged 38, and then sold off. Move down, retrace, move down, retrace, move down, retrace, big move down. And now it's no longer a retracement, it became a reversal. And look at the reversal point. When do we know that it's most likely no longer a retracement but has become a reversal? When the blue line crosses the green line and the black line gets sucked up into the green line. This retracement just became a reversal right there. Now, if we get a pullback to the BBC, could I go long? Well, you could. The only problem is we don't buy into resistance. If there's 2 points room to run, then yes, like let's say this setup was going to get you long at 35 or maybe or better, you know, like 33, 34. So there's plenty of room to run and get your 2 points on the way up to the zone, sure. But this would be cutting it way too close. There's only, right now the BBC is at 1636 and a quarter. There's only 3 ticks between here and here. So I would not recommend a long here. Now here's where I would recommend a long. Okay, if price breaks out of the top, pulls back, and starts to take off this way, right as we break that high, put a little bit of a cushion in there, okay, and catch that momentum. It's an idea. Or go back to the hourly and remind yourself that these are the numbers we're working with. There's a high probability if we penetrate 39.75 that we'll go to 41.75. But that's all it is. It's a high probability. I don't mean to make it sound like that's not a big deal. That is a big deal. That's as close to the Holy Grail as you'll ever get, is knowing that something is a high probability setup. Well, I want to know the percentages of that. Well, see, that's where you run off the road into the ditch. Because what happened last time has no bearing on what's going to happen this time. Each moment in the market is a unique moment in the market. It stands alone. You determine if something is a high probability setup, you understand why it's a high probability setup, and then you know that that sometimes there's no 100%ers. And so many of us burn up so much time and so much energy, so much brain cycles, trying to chase down that thing that will give us absolute certainty in the market. The only thing I'm absolutely certain of is that that thing does not exist. And I know that really spoils it for a lot of you. Sorry, spoiler alert, I'm about to tell you that the only secret in the market is there is no secret. Okay? If you can't understand it with if you can't make sense of it with your rational mind, it's smoke and mirrors. It's smoke and mirrors. Two setups in front of us. The market can go higher, the market can go lower. Right now we're sitting inside of the weekly trading zone. If you'll recall, a couple of hours ago, 3 hours ago, when we started this radio program, I said, well guys, we're sitting right inside of that 1 point range of the weekly trading zone, 37.38. Now 3 hours later, here we are. Okay. What's the red-blue line? Don, that is the CFMA1. That is the backbone of the CFRN indicator set. Thank you, Don. That's very kind of you. I appreciate that. And all of you, I'm glad you hung out. I hope it helped you. If I've touched on something that gets you thinking, okay, you can email me, support@cfrn.net, and as time permits, I'll be happy to email you back and try to further explain. Or Monday after the radio show, I'll hang out a little bit, and if you've got a question, I'll try to answer it for you then. Okay. All right. I hope you have a great weekend. It is the weekend, so please make it a point to spend some quality time with your family. Of course, I'll see you all in church on Sunday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Hey you, trader, why the sad face? Bad day in the markets? Bad year in the markets? If you're like many other traders I've met recently, you're about to give up, go broke, or both. They say the definition of insanity is when people continue doing the same thing and expect different results. Sound like you? You've invested a lot of time and money in this trading business, right? Well, before you give up or go broke, let's just take off the crazy hat for a moment, okay? Forget the schemes and scams that litter the internet. That 80% win ratio, in his dreams and your nightmares. The 89 consecutive winning trades guy, liar, liar, pants on fire. It really comes down to what actually works. At the end of the day, who can you really trust on your way to Wall Street? Here's a thought. What if you could spend day after day with seasoned traders and market analysts? What if you could cut through the theory and simply see real-time trades and strategies that work? Debunk the myths and learn the ropes. Cut the risks by avoiding simple mistakes. How much do you think that would be worth in the long run? If you could literally shave years off the learning curve and keep tens of thousands of dollars in your account for the actual purpose of trading, would that be of great value to you? Would that be the definition of doing something different? Right now, CFRN has a limited time offer. I want to invite you to spend a full week with the CFRN team. I want you to test drive our online platform and feel the power of our custom indicators for an entire week. I want you to witness real trades with real money in real time. I want you to see a humble, ethical, and proven trading system that's simple and, more importantly, that works. You can pass this off as just another sales pitch. You can risk tens of thousands of dollars and several years of your life in an attempt to prove me wrong. Or you can come hang out with us for just 1 week. No strings attached, no credit card required. All we require is a simple desire to learn. Stop the insanity today. Test drive our platform and indicators for 1 full week. Trade with us live for 1 full week. No strings attached, no credit card required. If I'm wrong, there'll be plenty of time to give up or go broke next week. So act today. This is a limited time, sensitive offer. To get started, visit www.cfrn.net. That's www.cfrn.net. CFRN, a community of believers who trade for a living.
You can now hear CFRN shows while on the go with Stitcher Smart Radio. On-demand news, talk, and more on your mobile phone. The latest episode is always available for you. No syncing needed and no memory or storage wasted. Available for your iPhone, Android phone, WebOS phone, or your BlackBerry. Downloading is easy. Go to Stitcher.com or check out your app store. Stitcher Smart Radio, the smarter way to listen to radio.
There's going to be a two-word phrase in the first section, then a two-word phrase in the second section that we need to pay attention to. The first two-word phrase is we have, so we need to pay attention to this we have, and then the second two-word phrase is let us. So you're going to see the scripture saying we have, so let us, let us, let us. And that's going to be how kind of this text breaks down. And so we need to pay attention because it's going to unpack for us how we live out what we've talked about for the last 5 weeks here. And if you've been here the last 5 weeks, we have been stuck in some severe repetition. And it's because we can't get out of it. It's like the writer of Hebrews is not going to allow us to get out of it because literally for 3 chapters he says the same thing in a different way over and over and over again. Just pound his point into us. That the old tabernacle with its laws and systems has gone away and the new covenant of grace and the sacrificial death of Christ covering all our sins, new covenant is in place. And so if you've got your scriptures, if you don't have your scriptures, there should be a little paperback one somewhere around you. Take that. If you don't own a Bible, steal that. It's yours, all right? Take it with you. I always like to say, because we have so many in there, if you want a nicer one, there's tons in the Lost and Found. So go get you a nice leather one and just tape over the name, man. There's tons of them back there. And make great gifts. They make great gifts. Here we go. No, Bill's your new nickname. I'm sorry, let's go. We don't have time. Here we go, 19. Therefore, brethren, since, what is it? We have confidence to enter the holy place by the blood of Jesus. Now, I'm going to stop there because we have, and so I want to talk about what he's referencing. Several weeks ago, we talked about how the tabernacle was an outlay of how things are at the deepest level of the universe. That you and I were created by God to operate in 3 worlds. The world of matter, or the world of taste and touch, the world of the senses, and that we do well in this world. Like most of you have eaten today, you have tasted, you feel the clothes that are on you. A lot of you came here tonight with your windows rolled down and felt kind of the warm air. We live in a world of matter, a world that can be seen, tasted, touched. It's here. And then And then there is the world of the mind, and this is thoughts and emotions. Art is kind of birthed out of the world of the mind, and the majority of us, we do really well at those two worlds, and we can be very successful at those two worlds and still have something kind of eating away at us, because we were also created not only to live in the world of matter and mind, but the world of the spirit. And this is a very difficult world for all of us, all right? We do very well at matter. Most of us do very well at mind. Most of us struggle intently with spirit. All right? And so the tabernacle kind of modeled this idea by having an outer court that everybody could go into, or a world of matter, and then they kept the scrolls in this room called the holy place that only the priest could go into, and that would be the world of knowledge or the mind. And then they had the holy place, which only the high priest could go into once a year, where the actual presence of God was, and it was separated from the rest of the tabernacle by this thick veil. And no one could go in there except, you know, without penalty of death. And so it's just there to illustrate that this holy place, this world of the Spirit that you and I have been created to walk in, is difficult to get into, if not impossible to get into, for some of us. Now go back and read this with me again, because you'll see what's happening. Therefore, brethren, since we have confidence to enter the holy place by the blood of Jesus. So he's saying that I have done away with the tabernacle system. The veil has been torn, and now anyone who wants to come in by the blood of Christ can come in. So if you've heard us reference being made whole here, we talk about wholeness and healing here a lot. This is what we're talking about. That through Jesus, we don't just have to live in a world of matter and a world of the mind, but the Spirit has finally been opened up to us, all right? So you and I can now enter into the holy place, not by our own works and our own efforts, but by the blood of Jesus, all right? So let's keep reading. We've got another we have. We've got another we have. All right? Therefore, brethren, since we have confidence to enter the holy place by the blood of Jesus, verse 20, by a new and living way, which he inaugurated for us through the veil, that is his flesh. And since, what's our words? We have a great high priest over the house of God. Now, if you were here last week, we went through and got to verse, I believe it was 18, where the scripture said, I'm no longer taking offerings, all right? And this was God's way of saying, whatever you want to bring to me and whatever you want to lay down at my feet, I'm not interested in it, all right? The debt has been paid in the death of Jesus Christ, and whatever the little religious action you want to come and bring and lay at my feet, I'm not interested in, all right? I'm closed. It's paid for. Your sin is paid for. Not because you do this or don't do that, but because Christ died on the cross. I am no longer taking offerings for sin. So every time we get into that little messed up place where we're going, I'll do this for you, and I'll stop doing this for you, and I'll start doing it, I'll quit doing this. God looks down at the altar and goes, what's this for again? Well, I'm a bad person. Well, absolutely you are. I've known that for hundreds of thousands of years, all right? But I've already paid for that. I really blew it yesterday. Yeah, I know that, and I knew that when I died on the cross several thousand years ago, all right? I knew that. I paid for it then. It's paid for. Take this piddly stuff. It's cute, but I don't want it, all right? It's cute, but I don't want it. I'm not taking offerings. And that's what's being referenced here. Since we've got this great high priest who handled our sins, all right? That's what the high priest did. He would get into the Holy of Holies with this bowl of blood representing the sins of Israel, and he would go in and make atonement for the sins of all the people. That's what Jesus, I don't want your gifts. I've done it. I am your high priest. My blood, I'm not taking offerings anymore, paid for. All right. So this is what we've been talking about for 5 weeks. I mean, this is it. In a simple 2-verse summary, this is what's happened, all right? The tabernacle and its rules and laws has given way to the grace and mercy of Jesus Christ. Here's the question, though, all right? Because I think probably the best way to explain it is I got this phone. The church got me this phone, and it was an attempt to really make us connected. And it's this phone that has, like, my calendar and email, and it can, like, make a cup of coffee for me if I wanted to, and it's a cool little gadget. But in the end, I can tell you how those things work, but I'm not really using it a whole bunch, all right? I just kind of use it as my gargantuan phone, all right? I kind of feel like sometimes I'm in World War II calling an airstrike or something, but it is I'm not getting the fullness of the device, all right? I can tell you how it works, but I'm really not using it in its fullness. And I think when it comes to grace, a lot of what happens to us is that we kind of get it and we can talk about it, but we find it very difficult to live in, all right? And we keep going back to the tabernacle and back to the law because we're not really sure what it means to follow Jesus in the new covenant. It's confusing to us. Good thing, the text is going to try to unpack for us what that looks like. So, since this new thing, since this new covenant has been brought to us by the blood of Christ, who is our high priest, then let us, all right? So let's see what the let us's are, all right? Starting in verse 21. And since we have a great high priest over the house of God, what's our two words? Let us. So because of this grace, and I got a lot of emails about this, so I'm excited about preaching. I got tons of emails going, well, what does it look like then? How do I do that? Okay, so here we go. Let us then draw near with a sincere heart. Now I'm going to stop there. Let us draw near. Now, we taught on this about 11 weeks ago, so let me once again try to unpack this idea that this draw near to God is not a reference to church attendance, all right? Now, let me try to get this across to you. You are no closer to God in this room than you were in your car on the way to this room, all right? He does not hang out here. Like if you came out here on Tuesday, he's not like sitting in the back room drinking a soda, all right? This is not where God dwells, all right? In fact, this is an old argument. If you'll remember the woman at the well, when she is engaged with this grace and with this love, she immediately wanted to make it about location, didn't she? She says, well, you Jews say that it's on this mountain, but we say it's on that mountain. Which one of us is right? And Jesus goes, you're confused. It ain't about place. It ain't about place. It's about personhood. It's about what's in your heart. It's not whether you worship here or here that matters. It's what's going on in here. In fact, here's the perfect illustration. We launched out a year ago next month a church in Frisco called Providence. We looked everywhere for a place for them to meet, and we found on the corner of Main and Main an old bar called the Broken Spoke. Something went wrong there that night. Something went wrong there about probably 8 months ago, and the place caught fire. So a half-burned-down bar on the corner of Main and Main was found, and we went, yes, all right? And so we purchased the Broken Spoke, all right? We purchased the Broken Spoke, remodeled the deal, and to this day, Providence Church is meeting in what is formerly the Broken Spoke. And one of the cool things that's happening there right now is as men and women are coming to know the Lord, they're worshiping in the place that used to be a place of debauchery for them. All right, so God's not in the heavens going, I'm sorry, I can't go in there. I'm sorry, I cannot walk into that. All right, places aren't holy, right? People are. People who have the Holy Spirit of God take over their lives. So when this says, let us draw near to God with a sincere heart, it's not referencing, hey, church buildings and church attendance. That's not the reference. That's not what he's talking about. All right? Now, I want to talk through this idea of drawing near to God with a sincere heart because it gets difficult and it gets cloudy when you weigh it against the tabernacle. Like, here's my example. Have any of you, and maybe I really am all alone in this, have any of you tried to get away from legalism, and so you drew up a list of things to do to get you out of legalism? All right? Anyone? Well, yeah. You're like, I've become legalistic. I will do these things to get out, all right? I've got to get number 3 done, and I will create another set of laws to get me out of this set of laws that has been absolutely devastating to me. So I got married and got out of college and was trying to figure out what it meant to really let Jesus have my heart and to not just live by the rules but really walk with him and have this relationship with him. And I found it unbelievably difficult. Unbelievably difficult. Because even we're trained, I'm like, if you've grown up in church, you get trained, even when you're a kid, you're trained to have a quiet time, right? And we probably should think of a cooler way to say that. It sounds like discipline, but you get in the corner and think about it. You meditate on that. And you've got this idea of this is what it's supposed to look like, this is how it's supposed to work, this is how it's supposed to feel and work itself out. And then, like, for me, I kept feeling like I'm trying to get this, I'm trying to do this thing that I'm being taught to do, and it's very, very fruitless. Right? So I'm getting up, and I'm having my quiet time, and I'm writing some things out, and I'm going through my Bible study, but in the end, it felt very fruitless and lifeless to me. Any other testimonies? All right, so I asked my wife for permission to get out and do some camping. And so Lauren, we didn't have any kids, and she had some friends in Dallas, and she was like, get out of here. And so we drove up to New Mexico, me and a buddy of mine, and we set up 2 separate camps, and I just went out there to try to get alone and get my head back on straight. And out there, I really feel like something was taught to me out there in the nowhere that really kind of changed the way I've engaged God from that moment forward. And what happened is really the first day where you kind of get alone and fast, you always kind of feel like you're crazy and you don't really know why you're out there. And then usually by day 3, you're just crying a lot. And then finally, day 4 or 5 rolls around, you can actually get some clarity and thought. And in that moment, I stopped considering, I completely stopped considering what has historically been told to me was right and wrong when it comes to a devotional life and a relational life with Jesus Christ, and started going, okay, what, and here's 2 questions I want you to wrestle through, all right? The question that I asked myself was, what stirs my affections for Jesus Christ? What, when I'm doing it, when I'm around it, when I'm in it, when I'm a part of it, what stirs my heart, what stirs my mind in its affections towards Jesus? What, when I'm doing it, reading it, a part of it, makes me want to know and be faithful and walk deeply with Jesus Christ? And so I started this list, and honestly, the list was really, really strange. Like an example was, it was close to that time that Lauren and I had gone to a funeral, and she was doing some talking while she was at that funeral with some friends. I didn't know too many of the people, and so I just kind of started walking through the cemetery, and I came across, I was about 26 at the time, came across the tombstone of a young man who died when he was 26. And so I sat there and stared at his tombstone and started contemplating the fact that 26-year-olds die. And listen, I'm young, man. I feel immortal. I mean, I do. I don't think I need to live today to its fullest because it might be my last. I mean, that thought rarely, if ever, really penetrates my soul. All right? It just doesn't. I'm young. I'm in somewhat of shape. My mind's sharp. I just don't go, I could die on the way home tonight. It's a rare thought to come across my head. So I'm sitting there looking at this guy's tombstone, wondering if he had a wife, wondering if he had children. You don't die of natural causes of 26. What took him? It's something that's out there that can take me. Yeah. And all of a sudden, I began to be very just filled with gratitude for the life that was given to me. And there was this deep desire in me all of a sudden to know Christ deeply and live life to its fullest. And so that's on my list of what stirs my affections for Jesus Christ. And on a regular basis, I mean, it's not like once a week or once a month, but I guarantee you a couple of times a year, I take my journal and usually Jonathan Edwards' resolution statements, and I head to the cemetery. All right? I've got staff. I've taken the staff. I've taken the staff and went, let's go, read headstones. All right? Oh, God, weird deal. All right? And they head out, and we take in the headstones. Now, okay. Now, I don't expect that your list is going to look like my list. And if I try to make your list look like my list, we've gone back to the tabernacle. All right? Another thing that gets me, and I don't do this as much, is there's something about really early mornings and really dark coffee. All right? Now, I know this is weird stuff, and it's just kind of how I'm wired. There's something about it still being dark outside, because no matter what time of the year it is, it's always cool outside at 5:36 in the morning. It always is. And so there's something about the cool wood of our porch on the bottom of my feet and a hot cup of coffee that makes me aware of the presence and the reality of God. All right? And there's something to me about reading books. Like, there's something about that smell. All right? There's something about music that stirs and moves the soul. I mean, good music. Never mind, I won't go there. There's something about these things as I go through them. There's something about, in the Scriptures, the narratives. There's something about the stories in Scripture. Now, I get it. I get theology. I get Romans, and I get the combination, but there's something to me about the stories of Jesus' interaction with people. There's something about the absolute flaws in almost everybody in the Old Testament that fills my heart with the hope that maybe God can use me. There's something about, so I have, since I've come back from the woods, I have tried to live life not by is this right or wrong, but does this stir my affections for Jesus? Now, Scripture is pretty clear that there are some things that definitely are right and definitely are wrong. I'm talking about drawing near to God with a sincere heart. I'm not talking about, actually adultery makes me feel close to the Lord. That's not what we're doing here, all right? You're wrong. That's not what we're doing here. I'm talking about drawing near to God with a sincere heart. Now, I would be wrong. I would be sinful.
The organizer has ended the session, and this